Just getting started, and how are you this evening? All right, and we go over this way. Here we go. Maximus, New York Dave. What's happened? Maximus Decimus Jensberg. You're on both. Okay, that's cool. Ahmed, how are you? Jen, how are you doing? Oh, stop recording. Let's go over to here. And now we are ready to roll. Good evening, everyone. This is James from Dividend Stock Talk. Brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow for a safe, predictable, consistent, and did I say easy? Strategy that consistently brings me 1% per week. Now, I'm not your typical trader. I'm extremely lazy, and I admit it. I got no problems with that. I don't like doing a lot of work. I like things to be simple, easy. Mega goof. Oh my goodness. Bob Bass, how are you doing today? Bob, you're new here. Okay, I have shirt in every single color. It says nothing at all about here, MAGA whatsoever. You want to put that label on me? Be my guest. Really don't care. Sorry. Sorry to ignore your insults. It is what it is. But yeah, I have a shirt in every single color. I had a blue shirt, I got a green shirt, I got a yellow shirt, I got a black shirt, I got a gray shirt, I got an orange shirt, I got a white shirt, and I have a red shirt. Just so happened we're in red today. Okay, so don't need any of that MAGA crap going on here. I don't do politics, so let's just jump on in and see where we are, see where we're going, and see what's happening. We got 11 people over on YouTube. Did you roll Estee Lauder? Yes, I did. Okay, my Estee Lauder went from 90 down to 60. I ain't selling it. I'm just going to keep it and keep rolling it forward. It does have, what do you call it? Braden, how you doing? My Estee Lauder does have nice premiums. So why would I get rid of it? Yeah, it took a huge hit. I didn't take a hit. You only take a hit when you sell. Do any small cap companies pay good dividends? They all do. He's wearing a MAGA shirt. Where can you buy that shirt? It's not a MAGA shirt, Poppy. It says that's a no, right? That's a bad word on your shirt. Really? Where the hell do you see? Oh, hell. Hell's a bad word. Sorry. What do you think about Snap-on? They don't have consistent dividends, and they're not a weekly optionable stock. Okay? Sorry about that. How you doing, Tyrese? I'm doing great. Maximus Decimus, 74. So, Pappy, why would you say I'm wearing a MAGA shirt? Okay? Hold that thought for 1 second. So, let me see if I can put it this way. This one happens to be red. This one has to be gray. This one happens to be black. This one happens to be blue. They all say the exact same thing. I don't like wearing the exact same shirt all the time. Just a different color. Red's got nothing to do with it. It's part of the rainbow. Really don't care. Hey, Benji, how you doing? Google. We looked at Google last night. That's a no. You're one funny little dude, my dude. Thank you very much. So let's keep on going on. What stock is on the screen right now? APA. Someone had me take a look at that last night. That is Apache. Okay, we were looking at, earlier today, we were looking at some software that isolates really good returns using the covered call. Well, this was one of them. However, it doesn't make it through my, what week of the quarter are we in? I believe we are in finishing up week 45. Next week will be week 46. All right. That being said, we did look at Apache earlier today, and it was a no only because we have a new 30-day bottom today. Okay, and I don't like buying at a 30-day bottom. I like buying at a, when it bounces off the bottom and then goes to the upside. Okay, I like 2 days of the upside. Okay, right now we are currently at a 30-day bottom. I can't tell if it is a 30-day bottom because we don't have an update yet. Because you need something to compare against it. All right, Gerald Choi, we looked at that last night, GOGL, and it was a no. I don't see why you want to look at it today because not much has changed between today and tomorrow. My husband will be joining you, taking my place. Jen, cool beans. How are things up in Canada? The kids all good and stuff like that? Okay, GOGL. All right, let's do it again. GOGL. Okay, Golden Ocean. All right, so Gerald, Gerald Choi. The reason I don't like this company is this is what is called a monthly optionable stock. Now there's only 12 months in a year, which means I can only do it once per month. So once per month only comes to 12 times a year. And if your average return on a covered call is between 1 and 3%, well, at 1 or 2%, it's 12 to 24% per year. Now, I like getting 1 or 2% per week. That comes to 50% to 100% per year. And I don't mind doing it every week because I've been doing my trades every single day for the past 20 years. It's just something that I do. Okay, what is your opinion on BTC? That's Bitcoin. That's going to be a no. Bama Redneck is in the house. Now, Stens, the reason why I don't do BTC, which is Bitcoin, is because there is no possible way I can use Bitcoin to put gas in my car. I cannot use Bitcoin to buy groceries. I cannot do Bitcoin to buy a cup of coffee. Yeah, I can do some exchanges and all that stuff, but it's a little bit aggravating, and I can't get I can't generate weekly revenue from it. Yeah, Stens, I get about 50% per year. Do I day trade and musically? No, I do not. Okay, Ardnomics, PLTR? No. PLTR does not have dividends. The name of the show is Dividend Stock Talk. We talk about dividend stocks. If it doesn't pay a dividend, no thank you. Okay? Okay, so just to satisfy some weirdo out there, I'm going to do a quick change. Apparently, somebody gets offended by the color red. Do I think I really care? No, I really don't give a shit. Because I honestly don't care about your feelings. Okay, Gerald, EC. What is EC? Another monthly. Dude, seriously? Another monthly? Okay, a monthly optional stock, you can only do it once a month. Once a month is 12 times a year. That's 1 to 24% per year. Yeah, no thanks, that doesn't work for me. Amy, how are you doing? Richard's in the house. All right, what trading platform am I using? This is called Think or Swim. It's available through Charles Schwab. Pappy, when investing, is it better to look for dividends or... Okay, I'm just going to ignore you, dude. Okay, so apparently you have issues. And I don't want to deal with issues. Okay, you have issues. I'm just not going to deal with it. Why are you concerned about dividends if you're just doing covered calls? Okay, now that's actually a good question. Ann Callaghan. Wait a minute. Ann Callaghan. And Callaghan the Black? Okay, so why am I concerned about dividends if I'm just doing covered calls? That's a good question, and I get that a lot. So let me ask you a question. If the company doesn't have dividends, which is sharing profits, okay, so there are two different kinds of companies. One shares their profits with their investors through a dividend. Second one, they take all the profits and they put it back into the company for capital growth. All right, so I'm looking for cash flow, so I'm not looking for capital growth. Rob, that ain't gonna happen, Rob, but I appreciate that. So capital growth I'm not looking for. I'm looking for safe, predictable, consistent 1% per week cash flow. So why do I like dividend stocks? More specifically, dividend stocks that consistently increase the dividends every single year for a minimum of 2 decades. Well, number one, it shows me that the company is consistently profitable, because you cannot increase your dividends if you're not profitable, especially if the dividends are a portion of the profits. That's one reason. Give me a second. My ginger tea helps with the throat. Okay, so second reason that I like dividend stocks. Stocks only move for one or two reasons. One of two. A known reason or an unknown reason. Either there's a reason for it to move or something that just happens. Okay? Now, an unknown reason. an act of God or an act of nature. Hurricane, tornado, flood, something you cannot control. Death of a key employee, a lawsuit. These you cannot plan for. Now, what can you plan for? A known event. Okay? A known event is something you can plan for, which is earnings reports, dividends, stock splits, special announcements, something that is coming up that you know is coming up that you can make plans for. So the reason why I like dividend stocks, Arnold, I can't do that. Can't do it anymore, Arnold. Sorry, dude. Okay. So if I know there's a dividend coming up, the dividend causes the stock to increase in value. So if a dividend stock, hold on, let's move to right here. Now, you see all these little green dots? They all represent a company that has a dividend and when it's paying. So what do we have? Microsoft, ExxonMobil, Capital One Finance, Ford, Visa, IBM, Citigroup, Baxter, Alcoa, Texas Instruments, Costco, so on and so forth. If I buy one of these companies 2 weeks before the dividend, the tendency is to increase in value. Can I get a shirt? Okay, yeah. I'm actually going to eventually have them available somewhere in the bio. So the reason why I like dividend stocks is because, number one, it helps me avoid reading all the quarterly reports and all the annual reports. If the company consistently increases their dividends, well, logic, reason, and common sense tells me they're consistently profitable. Okay, because a portion of the profits goes back to the investors in the form of a dividend. So if it's increasing, the profits have to increase along with it. It helps me avoid a lot of unnecessary reading. Okay, and just before the stock pays its dividend, the value goes up. That's why. And if they're not paying a dividend, how am I supposed to know predictably when the stock is going to increase? Do you have training over the weekends? Yes, I do, Amy. Stens. Uh-oh. How many years have you made 50%? Are we talking 50% exactly, or 50% or over, or close to 50%? Dang, I have so much to learn. Yeah, you probably do. AAL, American Airlines. Okay, Francis. Any good REITs? I like MPW. Okay, I haven't really found any other good REIT that I like. Okay, General Choi. Yeah, you do have a lot to learn, but that's okay. Okay, it all depends on when you jump on the merry-go-round. You can jump in when you're in your teens or your 20s, 30s, but eventually you're going to figure out at some point in time, oh, my hair looks terrible. At some point in time, you're going to retire. And whatever you're using to generate an income has to give you a consistent cash flow. So if I'm looking for a predictable 1% per week off of my portfolio, that enables me to be retired and not have to work if I don't want to. Damn, shut you. Oh my God. Rob, chill. Really? Seriously? So, that being said, let's take a look at some more of these questions. Tyrese wants to look at AAL. It's American Airlines. AAL. American Airlines, interesting. Now, I always go through the same, let's call it rigmarole, or the same patterns, or whatever. I look for the high, I look for the low. Where was it? Where is it? Now, this is the 1 year chart. Okay, the high of the year is right there. The low of the year is right here. Where was it a year ago? Where is it now? And what direction has it gone? It went up, it went down, now it's going back up again. Well, great. Francisco, which one you think is better, VC or MO, taken in consideration debt ratio and return? One is a REIT, one is not. All right, Francisco, let's take a gander at both of those, okay? I'll give you my opinion. Okay, now VC, VICI, never heard of it. MO is Altria. I have heard of that one. And Altria is on my list and VC isn't. Okay, so that being said, let's keep on moving. Okay, so as we're moving along, American Airlines, let's take a look. Before I even move on, I want to figure out, is it a contender for next week? Well, it's currently sitting at $13.83. The closest strike price is going to be the 14, and that's paying 21 cents a share. 21 cents a share is over 1.5%. So if I could get 1.5% every week, that's awesome. A year ago, we were sitting at 12.01. The high of the year, 16.12. The bottom of the year, $9.10. Okay, I know kids in high school have $9.10 to buy some American Airlines. All right, the bottom of the year right there. Let's look at the last 30 days, because the last 30 days is going to let me know whether or not it is a viable contender for my consideration. High, low, where was it? Where is it? What's the direction? Up. Here's a 30-day high 2 days ago. Now she's coming down. Okay, so unfortunately, American Airlines, not quite this week, because where I want to buy here at the bottom, where she turns around and then goes up. So here is the high of the 30-day period. More than likely, there's going to be what's called profit taking, and when profit taking takes place, the stock drops. It gets to a certain point, and you have investors like me that say, that's the deal, let's buy some. Okay? So, what does it normally do this time of year? Well, you really can't mistake that. Look at this. So from the bottom right here in October, the middle of October, a nice run to the upside for the whole fourth quarter. Roman, what is going on here? All right, so that being said, I like American Airlines. The numbers look good, but it's not the right time to buy, because the right time to buy will be after it drops down and then turns around again. So I'll put American Airlines on the list for 2 weeks from today. AAL. All right, we'll look at it then. Crop Top Bimbo. Well, hello to you too. Okay, user 74 72 81 030. What is it with people on YouTube? Okay. Kohl's. Kohl's is next. KSS. Now, I do have some Kohl's, and it is at the bottom. But look at the high. The high's $29.57. The bottom's $17.51. A year ago, we're at $24.15. Shot up. Now she's in a dank decline. Last 30 days, right here. You can clearly see what's happened in the last 30 days. Went up. Now she came down. Here's the bottom. Now, I do own some. Okay, I do own some Kohl's at 23.23 right here. Down here, see this position, 23.23. I did sell the 950s because I don't think it's going to be. The 19s. Yeah, I think I sold the 19s. Yeah, so that's going to expire worthless. Hey, Francisco, what about IGV thoughts? Got 3 day. I have an IVG. I never even heard of IVG. IVG. We're going to get to VCNMO in a minute or two. Just give me a few bits so I can take care of some of the questions here. So Kohl's is in a downturn, looking for the 30-day bottom. Well, it could be today, but we don't know until it stops going down, turns around, goes back up. We've watched Walgreens. We watched Walgreens drop, and it took almost 6 months for it to find the bottom, but we finally found it. Turned around, went back up. Performance is lower if dividends is higher. Colonel Sanders, nice of you to stop by. I thought you died decades ago. Okay, Kivo Gemma, Google. GOOG. Yeah, that's going to be a no, because they just started paying dividends, and I think they're into 1 year. I think they paid 2 dividends so far. So I'll be looking at Google, let me think. 19 years and 6 months. Okay? Other than that, I have no desire to look at Google. Dude, I would love to learn. Uh-oh, Stens. Dude, I would love to learn how to build calendars in Thinkorswim. Stens, it's really not that difficult. Okay? You come over to the watch list over here in the top right-hand corner, top left-hand corner. Okay? The box right next to it. You open it up, come down here, and you create a watch list. When you create a watch list, you can put whatever name you want there. Then you import all the symbols you want to put on there. Okay? Once you get that done, you hit the save button. And then you come over to the Market Watch, come over to the calendar, then you click on the little gear right up there, and then you go to personal, and then there's all your personal lists. Okay? I got lists for the dividend aristocrats, dividend champions, dividend contenders, dividend kings, Warren Buffett's list, high volume stocks, blah, blah, blah. I just like looking at certain stocks that meet my criteria. Let's go back to here. Basilio. What is the capital I need to get started? Okay, Basilio, my grandson started out with $50. Granted, he's only 4 years old and he's got a long way to go, so it's not that big a deal. You need to figure out what works for you. Okay, some people start out with a lot, some people start out with a little. All depends on where you're coming from. Let's see if we can get Facebook to work. Apparently Facebook is not working either. That I need to get a new okay, what capital do you need? I did that one. Stens, have you ever been interested in learning ThinkScript? Never heard of it. What's your top dividend? It would be Macy's. Ed wants to take a look at AGNC. AGNC. That's a REIT. Okay, let's take a look. First thing I always want to look at anytime I look at a stock before I even look at the numbers is I want to look at the chart. I want to make sure it's not at the high of the year. I want to make sure it's not at the low of the year. And I want to make sure it looks interesting. Well, this one is, because right here. Your high's way up here. Your bottom's way down here. We're somewhere in the middle. Great. The high, the low, where was it? Where is it? What's the movement? Up, down, up, up. So it's turning around right here. That's what I want to see. I want to see it go to a high, pull back after your profit taking, consolidate down here, turn around, go back up again. Well, let's zoom on into that. Okay, last 30 days is always my favorite. Look what happened over the last 30 days. What, 1030 up to 1060, down to 930. Okay, back up again. Currently where we are. Perfect timing to jump into this one. Okay, 2 days to the upside after the 30-day bottom right there. Cool. What does it normally do? Now, to find out what the stock normally does this time of year, I take a look at the seasonality chart. Now, if you don't know what a seasonality chart is, it's basically looking at January 1st, all the way here on the left, December 31st, all the way here on the right. Looks at 10 years worth of data. That's 2014, 15, 16, 17, so on and so forth. The last 10 years, what is the average movement? Well, the blue line here, well, that's this year. This little blue dot right here, that is today. Okay, the little blue dot right there. I want to left click on that blue dot, drag it to the right, and that highlights from today all the way to the end of the year. Look what it normally does. Now, this does not guarantee that it's going to do the exact same thing again. Francisco, Maria, maybe check out SCHD or VOO. Hell no. Both of those are horrible. Okay? Now, I can tell you're new here. Anytime somebody new asks me SCHD or VOO, there's a few other ones. JEPQI, another one of those. Yeah, no. Sorry, then if you just check the damn numbers. Okay, apparently, Lip Sausage thinks it's an idea for Barron Trump to run in 2028. Sorry, dude, you got to be a minimum 35 years old. Yes, Cisco, seriously, VOO and SCHD are horrible. Okay, when anyone ever takes a look at those and say, hey, these are great, then I know for a fact you don't do any research on your investments. SCHD pays 1.3%. and VOO pays what, 3.4, something weird number like that. That is absolutely horrible. Why would you put your money into a company that gives you less than what the T-bill rate is? The T-bill rate's around 5%. Why would you invest at 1.6? Maria, how are you today? All right, AG&C. Let's finish up with AG&C. JP Morgan. JP. Is that JPM? Or is this JP? I have no idea what JP is. Okay, seasonality, go back to where we were. Here we are. Okay, so AG&C at this moment in time is at 973. The closest strike price to 973 is going to be the 10. It's going for 1 penny. Yeah, no thank you. JPQ, hell no. Yeah, JPQ, sorry Maria, no. Absolutely horrible. You need to really, honestly, all right, wait a second, just for the fun of it. JPQ, okay, into Yahoo Finance, JPQ right there, okay. Morgan Stanley NASDAQ Equity Premium Income. They make it sound great, all right, but let's take a look at the numbers. It's currently at $56.60. Okay. Question, so which do you consider instead? Francisco, hold on. I'm going to show you JEPQI. Okay, that one that you guys like. Let's go all the way back and see all the dividends that it offers. Maximum amount of dividends? Yeah. Seriously, take a look. The very first dividend it paid was 2022. 2 years. Okay, most companies never make it past 3 to 5 years. This company's only 2 years old. Why the hell are you putting your money into a 2-year-old company? That's number one. Number two, let's see how consistently profitable they are. Because if it's paying a dividend every single month, well, shouldn't it get higher and higher every month? Think about it. 38, 34, it went backwards. 41, 55, great, it's going up. 38, backwards again. 68, 55, backwards again. 58, 44, backwards again. 43, backwards again. Yeah. But wait, it does get worse. Okay, go to the summary. Summary page right here. Okay, JEPQI is offering 9.56. I mean, instead of SCHD. It's a shitload of stuff better than SCHD. Microsoft is better than SCHD. Look at Microsoft for a second. MSFT. Let's go to historical data. Okay, get historical data. And we want to go to dividends only. Let's look at all the dividends. All of them. Okay, just for the fun of it. Let's go all the way to the bottom. Now look. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75. Consistently going higher and higher. Okay? No backwards. Okay, imagine you're retired and you're getting $1,000 a month or $1,000 a quarter, whatever it is. Okay, you're getting $1,000 a month and you're getting used to that kind of income. Fixed income. And all of a sudden, they decrease it by 90%. Okay, then it goes up a little bit. Then they decrease it by 40%. And then it goes up a little bit. And then they decrease it by, no. Going up, down, no thank you. Stens, 50% per year is so nuts, I'll have to get your Patreon. Okay, Stens. Considering you're new here, you probably have never seen this, so let's go over to here. Now, this is one of my web pages, okay, The 10-Minute Trader. Okay, it's available in the top left-hand corner where it says my bio up there, Dividend Stock Talk, goes right to my website. In here, you will see the rate of return I get every single month. Every single one of my trades so far this year is available for you to check online. Now, when I say 50% a year, that's usually 1% or more every single month. I missed some AG&C. Where did I stop? All right about here. Okay, dude, you ready, Stens? Week 1, first quarter. Okay? click on it right here. January 2nd, 2024. Macy's, General Motors, Ford, CVS. Okay, I made 2.12% first week of the year. This account over here, 2.99%. That's a little bit below 3%. CVS, General Motors, Southwest Airlines, Comcast, and Ford. Okay, look at the rate of return. 2.43, 1.3, 0.85, 1.35, 2.78, 0.9, 1.03, 1.62, 3.68, 1.06, 1.9, 2.57, so on and so forth. Every single trade that I've made so far this year is available for you to take a look at. Okay, go take a look. Check out the numbers. Look at this week here. Week 24, the 11th week of the second quarter. Now, I didn't make 1% this week. Okay, Intel, Kohl's, and Wynn. I made 0.6, just a little bit over 0.5%. When I say I average 1% or more every week, I don't make 1% every single week. Okay, let's go back to where we were. All right, let's keep on rolling. Okay, Ryan Lewis. Stock to hold long term. Okay, now, Ryan, you got to explain to me in a manner in which I'll understand. What do you mean by long term? My idea of long term is 30 days. Longest I've ever held anything is 9 months. I jump in, get my profit, I jump out, I say thank you very much, I'll see you the next time you look good. Because I look at the same stocks over and over and over again. Okay, Stens, to answer your question, if you go up to my bio, you go to my website, The 10-Minute Trader. That ain't it. That ain't it. There it is right there, The 10-Minute Trader. Trading live online. You click on that, and that takes you to my Patreon, which is, come on, there it is right there. Dividend Stock Talk. And there's a picture of me. Blah, blah, blah. Nice, neat, fun. All right, let's get back to where we were. Baron Trump, yep. Oh, user 68199662048. Why can't we call you Peter? I'm going to call you Peter, all right? XOM, which is Exxon Mobil. XOM. First thing I always want to see when I look at a stock, 1 year chart. Where's the high? Where's the low? Where was it a year ago? Where is it now? In what direction is it going? Down, up, down, up, down, up. 121.11 at this moment in time. 121.45. The closest one's going to be the 122 or the 120. Yeah, neither one of them is giving you 1%. So as much as I like ExxonMobil, and I do like ExxonMobil, it's going to be a no this week because the numbers just don't work. Cheryl, thank you for following along. Ed, Taris Abdul, Rahim, me too. Okay. Well, do you not want more growth, though, if you don't have much capital? Okay, Kivo, I'm going to agree with you 100%. Wake Olda, how are you doing today? And Defritas, ¿qué pasa, amigo? ¿Cómo está? How are you doing today? All right, so Kivo, I'm not looking for growth. Okay, when I say you have two opportunities, one is growth, one is income. I'm 60, I'm retired. I have a nice little nest egg. I put it aside. I get 1% off of it every single week. That works for me. That's the only thing I am showing here, the only thing I am teaching. Okay, I have a lot of trading strategies up in my head, but it gets confusing if I tell you all of them at once. So here, I only teach one trading strategy only. Okay, buy a dividend stock before the EX date, sell a covered call against it, get 1% per week. That's over 50% per year. Chipping in from New Zealand. Thanks for your advice. Well, alrighty then. New Zealand. We had someone checking in from New Zealand 2 days ago. Cool beans. Tudo ben. Alrighty then. All right. So that being said, Okay, if you're really looking for capital appreciation, if you're looking for a stock where you can put your money and watch it grow, 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 you're in the wrong place. I don't do that at all. I'm looking for a simple, safe, predictable, consistent 1% per week. That's it. Okay, I don't want to sit in front of the computer. I would prefer to hang out with my kids or hang out with my grandchildren. Well, I only have one at the moment, but I'm hopeful. Actually, I'm expecting a grandchild. 6, 7, 8 months, something like that. Okay. Altria. Loran. Let's take a look. Is it Loran? Yeah, Loran Jacobs. Altria, M-O. Okay, so we're going to compare, because somebody wanted me to compare VC, V-I-C-I, to M-O. All right. Number one, Altria has been around for over 100 years. Okay, that's one thing going in its favor. Number two, they have increased their dividends to the shareholders for more than 5 consistent decades. That'd be higher and higher and higher and higher dividends every single year. That's one of the prerequisites of being a dividend king. Now, VC, V-I-C-I, I have no idea. But let's take a look at Altria. The high, the low, where was it? Where is it? Where is it going? Up, down, up. Now she's going sideways at 54.27. So the 55s are going for 11. The 54s, yep, this is going to be a no. Okay, if it's not giving me 1%, no thank you. No dividends, no thank you. No weekly options, no thank you. No 1% per week, no thank you. There's a lot of companies out there. In fact, there's 9,754 companies available. That's a lot to choose from. Okay, so I only have 2 criteria. Only 2 when I'm looking at a stock. Consistency with increased profitability. That should be a no-brainer. Consistency with profitability. That means consistently profitable year after year after year. That's my number 1 priority. Number 2, weekly options. I want a cash flow on a weekly basis. I don't want to have to put my money into a stock and wait. Who knows how long you have to wait? No waiting at all. Okay, I get notices every once in a while that a member of my graduating class has passed. It's like a shitload of them are gone. So what makes me think that I have a guaranteed 10, 20, 30 years? There isn't. I want to enjoy life now, and I want to make sure that my money is working. I don't want to take money, put it aside, and wait for it to grow. No, that's not what I'm looking for. Okay, so let's keep on going. Leo wants to take a look at Emerson Electric. EMR. That's going to be a no, Leo. What expiration do you use? Clutch, I use 7 days. If I'm buying a stock first thing Monday, I want the option to be 7 days away or 5 days away, Monday through Friday. I grew up in the 60s, 70s, and 80s. We went to work 8 o'clock in the morning. We got out of work at 5 o'clock at night. Same thing with the stock market. I jump in at 9. Check that out. Woohoo! I jump in at 9 o'clock. I'm out at 4 o'clock on Friday. That's what I'm looking for. All right, so Emerson Electric is going to be a no, and the reason why it's going to be a no for this week, Leo, is look where it is. Okay? A couple of days ago, we were at 108. Well, now we're at 128. Now, here's a question you need to ask yourself. Clutch, you're welcome. You need to seriously ask yourself this question, Leo. If last week you're at 108, and today you're at 128, that is a 20% increase in 4 days. Okay? Monday, 108. Friday, 128. A 20% increase. If you don't take your profits, the market maker might take it away from you. Because what is stopping the market maker to drop this thing next day? Nothing. Okay, you don't take your profits, they'll take it away. And here's another thing about profits. It's not a profit until you take it. And nobody ever went broke taking profits. All right, so that was EMR. I like EMR. KHC. Hassenpfeffer. How are you doing? Stens, are you shitting me with a question like that? Stens? No, I really appreciate your interaction. Really, I honestly do. But what I'm going to do for you, as soon as I'm done here with Hassenpfeffer and Heinz ketchup, We're going to take a look at SCHD, and I'll show you what a big piece of floating turd it really is. Okay? Hello, I bought RPRX this week. So what's your thought? Well, my thought is you should have done a little bit more research before you're buying that. But Haas and Pfeffer, let's take a look at Heinz Ketchup, KHC. All right, Heinz Ketchup, here we go. Now, Heinz Ketchup just so happens to be a 100-year-old company. It's more than 100 years old. It is a dividend king, means they've increased their dividends to the shareholders every single year. Isn't that what you want? Consistent profitability? All right, so this is the year chart right here. The high of the year is at 39. That was back in May. The low of the year is 31. That was in July. A year ago, we're at 33. Today, we're at 33. Explain to me what happened all year long. A year ago at 33, right now, we're at 33. All this you missed out on. But let's take a look for a second. Let's say a year ago you're at 33. All right. As the stock goes up, why the hell didn't you sell it? And then she drops. Well, if you like it, why didn't you buy it? She goes back up again. Why didn't you sell it? And she goes back down again. Why don't you buy it? Okay, when she goes all the way up, well, that's when you sell. When she goes all the way down, that's when you buy. Why hold it year after year after year? Last year it's 33. Right now, it's 33. What the hell's the point of holding it? Aren't you supposed to be getting a profit off of it? Yeah, they pay a dividend and they increase it every year. Is that what you want, just to collect a dividend? More power to you. That's not what we do here. Okay? We buy low, we sell high. Buy low, sell high. Buy low, sell high. Because people are predictable. When the stock goes up, you're going to have people taking profits. What happens when people take profits? The stock goes down. When the stocks go down, that's when you buy it at a discount, as it's turning to go back to the upside. Because have you noticed? Have you seen anything in here whatsoever where the stock says, wait a minute, hold on, I got to go over to Jim's house and mow the lawn? No, they don't come to your house and mow the lawn. They don't wash your dishes. They don't walk the dog. They don't rake the leaves. They don't do anything but go up and then down, up and then down. That's all stocks do. Find a good company that you like. There's nothing wrong with Kraft Heinz. It's a great company. It's been around for over 100 years. Okay? But at the high, you should be selling. And when she drops, as she turns around, finds the bottom, turns around, goes back up again, that's when I would buy. Buy low, sell high. When have you ever heard somebody said, buy high, wait for it to go higher? There's no guarantee it's going to go higher. As a matter of fact, the people who bought it at 39, who thought it was going to go higher, they're still holding on to it and saying, what the fuck just happened? Okay, they go up, they go down. You don't take your profit, it's your own damn fault. Okay, Stens. Now, I appreciate your interaction, really do. Let's show you exactly what a piece of crap SCHD actually is. SCHD. Two things right off the bat. Francisco. All right, let's see what Francisco's going to say. New here. I got the concept. Makes sense. I do play Momentum, which is about the same kind of. Same. Yeah, basically the same. But there's a little bit of a twist what I do, Francisco. It makes it more predictable. Now, remember when I say I want something that's simple, safe, predictable, and consistent. And the reason why. Okay, I've been trading for 20 years. The first 5 years weren't that great. Okay, now my next 5 years, my next 15 years, was because when my daughter was 9 years old, 2008, she'd jump up on my lap and say, Daddy, can you teach me what you're doing?
Which my dad doesn't know on that, but I do. Being part of that, you're going to be getting weekly lists of stocks I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from.
Over 20 days, it's not changing. What's that mean? That means every single day you buy there's a different company paying out dividends. Every time I see that, I crack up. Because when you have a 9-year-old, you got to keep them entertained. Okay? So how do I keep a 9-year-old entertained and interested? Well, I had to make it fun. Okay? That was 15 years ago. Okay, when she was 9, she jumped on my lap, said, "Daddy, can you teach me to do what you're doing?" Okay, great. So I had to make a strategy specifically for a 9-year-old little girl. Simple, safe, predictable, consistent, and no way that she could lose. What's going to happen if a 9-year-old girl loses all her money? She's going to cry. Dad is going to feel like shit. Mama's going to get involved. I'm going to be sleeping on the couch. If not, outside in the camper, one or the other. Either way, it had to be simple, safe, predictable, and consistent, and easy. All right? So, that being said, Mr. Clean Squared. Okay, dude, you really want to go head-to-head with me? Be my guest. Don't just blurt out something and just take off. Okay, that's rude. As I was saying, okay, simple and consistent and safe. That's what I'm looking for. So, as I'm looking for SCHD, number one, okay? Number one, it's a monthly optionable stock. The current price right now is $29.12. The closest one's going to be $29, and it's paying 15 cents. Not even 1%. So if I'm looking for 1% per week, this ain't going to do it. That's number one. Number two, it's at a current high at the moment. When have you ever heard anybody say you make money in the stock market by buying high and waiting for it to go higher? No. You buy low and wait for it to go high. But wait, it does get worse. We're going to jump on over to Yahoo Finance. SCHD. And we're going to actually take a look at the numbers. We're going to take a look at the dividends and see how well SCHD has been paying out their dividends. Okay? Because if the company is profitable and they share the profits with the investors, well, doesn't logic tell you that the dividends should get higher and higher? Well, let's take a look. Okay, only 2011, which means 14 years of dividends, and that's all. What do you think about Tesla now? Okay, Maria, I don't like Tesla. They don't have dividends. No dividends, no thank you. No options, no thank you. No 1%, no thank you. There's 9,754 companies. Why should I make Tesla an exception? If I don't know when, predictably, it's going to move, where's my advantage? There isn't one, because it's like every other company that doesn't have a dividend. How do you tell when it's going to move? There's no predictability to it whatsoever. So let's take a look at the numbers here. Number 3 reason why I don't like it. Less than 20 years of dividends. Less than 20 years of consistent profits. Let's take a look at what the dividends look like. 12, 5. Not even a good start. 21, 9. That's more than a 50% decrease. 28. Again, more than a 50x. Wait a minute. That's a 60% decrease. 23, 8. Again, decreased again. 9, 8, 28. 28, 9, 31, 10, 60% decrease. 27, 10. Yeah, all over the place. These numbers aren't consistent at all. So you're giving your money to, let's call it a crap shooter. Never the same, never consistent, never increasing. But wait, it does get worse. Seriously, let's take a look at the summary. Now, the summary, so far, that's 4 things I don't like about SCHD. So the summary, Schwab U.S. Dividend Equity ETF, SCHD, $29.08. Okay, do you see the yield right there? It says yield, 3.4%. Okay, that is less than the Treasury bills. Treasury bills are paying over 5%. This is paying 3.4%. Explain to me in a manner why you think 3.4% per year is a good investment. I'll wait. I mean, we all wait. You know, it's a couple hundred people here. Be more than happy for you to explain why you think 3.4% is better than 50%. Elliott Wave. Oh, show us some. Oh my God, really? All right, let's go. All right. I missed all these questions. Sorry, I have to go backwards. All right, so Stens. Hopefully that enlightened you a little bit to take a little bit deeper dive into the actual number. They call it fundamental analysis. Okay, hold on. DeFritas, how are you? Okay, being at 1% per week. How do you do that? Okay, DeFritas, hang out, chill. I'm going to actually show you some examples exactly how I do it. I look at the exact same stocks over and over and over again. There's 9,754 different companies to choose from. I only look at 300. That's it, only 300, but it's not that difficult. NeoShop, RPRX. RPRX. No. Simple, no. Reason why it's a no? Monthly options. If I can get 1 or 2% every single month, great. That's 12 to 24% per year. Why would I do that if I'm currently getting 50 to 100% a year? Right, who's that? NeoShop? NeoShop, does that make sense? If RPX, even if I'm right and doing a covered call on this every single month, that's still 12 to 24% per year. But if I do a covered call on a weekly stock, that's 50 to 100% per year. Okay? Jack Rietz, would you suggest buying these stocks in a brokerage account or an IRA? Okay, Jack, when you're asking questions like that, I really suggest people go and take a conversation with a tax strategist or tax planner, because there are different benefits depending on how you want to hold your assets. How to learn your strategy. Hayes, just hang out, just keep on looking. I'm here every single night. Check out my video since NSA seems to think you're interested. I have no idea why you think I'm interested in NSA. Stens, thank you. You're welcome. Stens, I first learned of a dividend classification from you many months ago. Appreciate that. How do you connect your laptop to the computer or PC? USB, what's this? I forget which cable this is. This one's too short. But anyway, I got one like 30 feet long. So you plug it into the side of your computer, you plug it in the back of your TV, and you just, when the input. So you have your different choices of inputs. You input 1, input 2, so on and so forth. Hayes, how do you, I already did that one. Okay, Everaldo de Freitas, AGNC, we already looked at that one. Do you focus on momentum trading? Colin, I focus specifically on dividend capturing 2.0. It's a strategy I came up with. I look at a dividend stock just before they pay out their dividend. Stocks have a tendency to increase. So knowing that a stock is going to move up, what do you do with that information? Well, you can buy the stock, you can buy an option, you can do a spread, you can do a calendar spread, you can do a covered call. There's a lot of strategies you can do once you know when a stock is going to move. Me, I like simple, easy, predictable, consistent, and no way to lose. That would be the covered call. Simplest, easiest, safest trading strategy there is. Is T. Rowe Price a solid investment vehicle? Well, let's take a look. T. Rowe. It's a monthly. If you like monthlies, if you like T. Rowe Price. Well, right now, she's coming off of a high of the year. Okay? Here's the high of the year on Wednesday. Thursday was a down day. Friday was a down day. Ask yourself a question. If your 30-day high is at 109 and she hits 122, that's what, $13 increase, 13%, roughly, 12, 13%. For 1 week, take your profits, say thank you very much, and wait for another opportunity. Okay, I honestly cannot answer, Viceman, if T. Rowe Price is good for you. I know nothing about you. I have no idea what your goal is, no idea what your risk factors are. I know absolutely nothing. So I cannot give you any advice on that. And I don't give advice anyway. All right, Collins, do I focus on momentum trading? No, I don't. ThinkScript allows 2S users to automate certain processes. I'm reading Schwab's manual. Cool beans. AGNC, we already looked at that one. Carmen, how are you today? Yes, you're right. AGNC is good. VRCA, the best, please. Okay, let's take a look at it. VRCA. VRCA. Hell no. I don't like monthlies. Look at the premiums right here. 0, 0, 0, 0, 0. No, those numbers are horrible. And it's not even dollar. How could it possibly have 20 years of increased dividends if it's not even $1? Sorry. We already looked at Kohl's. KHC, Haas and Pfeffer, we already looked at it. RITM. RITM. No. Okay, see, Keith, you're not paying attention. Monthly? No. I don't do monthly stocks. 86 is in the house. Stay away from annuities. Create your own. Exactly. Thanks you, Hassan Pfeffer. Smiles. Ohio, Kentucky, and Georgia just had a 7.6 earthquake, asking for all units, National Guards, and jacks. Okay. Please pray this is that true? Okay, I have no idea. NeoShop. I bought RPRX this week. What's your thoughts? I already said it wasn't something that I would do. How's that? Lay, can I do this on Thinkorswim using level 1? Yes, you can. Guidance. Hey, James, what's the first hours you teach? What days and hours you teach? I'm here every single day, 9 p.m. to 11:30, up to the end of this year. Okay, I'm looking for a small amount of people that want to join my morning trading group. Great. You like what I do? You like 1% a week? Fine. XOM missed the window? Yes, you're right. UPS. Let's take a gander at UPS. Ron Burgundy. You couldn't come up with something else? Couldn't use your real name? Okay. UPS. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down. It's currently at 132.80. The 133s are going for 109 to 132, not making your 1%. But here's something you may not have known if you're taking a look at UPS. The seasonality, you'd think that it consistently goes up to the end of the year. Not so. It seems to stop right there. Okay? Currently, here's where we are. Okay, she's in a nice upward trend at this moment. And it gets to the peak, which is the end of November. The beginning of December, the stock has a tendency to go down to the end of the year. So if you like UPS, jump in until the end of November. Then get out. Matt, PLTR. No dividends, no thank you. All right, 000. So show us some Elliott wave analysis with your up and down. No. Okay? I don't do that. Because apparently you weren't listening. When I said I created this particular strategy, I give you this strategy for free. Once I tell you this, you don't need me for anything. Okay, you're picking a good quality stock. Well, that's easy. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list right there, over 300 companies that actually meet all the criteria. That's number one. Number two, you put them into a calendar. The calendar tells you exactly when they're paying their dividend. Okay, when they're paying their dividend. That right there, 90% of all these stocks go up in value before they pay their dividend. So you know who the stocks are. You know when they're going to go up. Great. So now what trading strategy do you use? The Elliott wave ain't going to tell you shit. Okay, the calendar will. Okay? When's ExxonMobil paying a dividend? It's paying on the 14th. Well, when's the best time to buy it? 2 weeks before the dividend. On a Monday. Okay, that was 2 weeks ago. Okay? AGNC, they're having their dividend on the 29th. Well, when's the best time to buy it? 2 weeks before, on a Monday, on the 11th. That's this coming Monday. That's the best time to buy AGNC if you like AGNC. Well, that's not the only thing you want to look at. Just because they're paying a dividend, just because it usually goes up that time of year, well, what is the chart telling you? Okay, you don't want to buy at the high because there's no guarantee that it's going to go higher. Okay, no guarantee that it's going to go higher. So I never buy at the high. I wait for it to come down, turn around, and go back up again. That's where I like to jump in, as it's going back up. Okay, Mr. Clean did it again. Okay, you want to challenge me? Great. Come up with something really good for me to answer. You want to test my intelligence? Great. One trick pony doesn't mean shit to me. Lay, Google, and Apple. Okay, Google's going to be a no, because they've only paid 2 dividends so far. That means they got 19 and a half years to go. Amir King, don't know you, dude. Sorry, so you cannot join me. Okay? But Apple, it's not on my list because they don't have 20 years of dividends. But you know what? Apple is on Warren Buffett's list, so I let it slide on in. So let's take a look at Apple. Apple is one of those great companies that you got to know when to buy it. Okay? Here's the high right here. Here's the bottom right here. So what has it done all year? It went up, it went down, it went up, it went down, up, down, up, down. Now she's turning around right here, going to the upside. Now I jumped into Apple at 230. Okay, now it's at 226.96. So let's take a look. Okay, a year ago we're at 182. The bottom of the year was in the middle of April, and that was 164. The top was 236, and that was the middle of July. Okay, she pulled back. Here's the last 90 days. Look, up, down, up, down, up, down. Now it's going back up again. Great. Let's look at the last 30 days, because the last 30 days gives me a good idea of where do I think it's going to be by next Friday. Because I want to buy on a Monday, and I want to be out on a Friday with my profit. I want that 1% every week. That's over 50% per year. Okay, so 30 days ago, we're at 124. Shoots up to 138, drops down to 220. Now we're at 228. Okay? 1, 2, 3, 4 days to the upside. Great. What are you waiting for? The 30-day high is here. 30-day bottom's here. It's on its way up. That is elementary. You can get someone in third grade to say, where's the high? Right there. Where's the low? Right there. What direction is it going? Up, down, up. Actually, it is that easy. Adults have a tendency to make it more complicated. So we take a look at the seasonality chart. What does a stock normally do this time of year? Well, don't even worry about this time of year. Look, January 1st, December 31st. That is a definite upward trend all year long. No big jumps, no big dips, just steady all year long. And that's 10 years worth of data. 2014, 2015, 16, 17, 18, so on and so forth. 10 years. This is what it normally does. Here's where we are now. What's it going to do? Well, it's going to continue going up to the end of the year. That's what Apple does. So what does that mean? Okay, let's go back to here. Let's move this that way. Let's go right to here. What it means, at this current moment in time, I can buy it first thing Monday morning, 226.96. The closest strike price is going to be the 227.50. And it's paying 211 to 216. Okay, it's a little bit out of the money. So it could give you your 1%. Not quite. So that's one of those you have to judge. Do I like it? Do I want it? Do I want to take that chance? So on and so forth. But that's a personal choice. Do you like Apple? Do these numbers make sense to you? Do you think it's going to continue to go up? Even though it goes up every single year for the last 10 years. Your website has a course of trading strategy. Yeah. Congrats. Let's going. Rural Root Riches. SMCI. No. What should I do with SMCI? Run away from it. What do you think about AGNC? Well, we already looked at it already. iFlyU2. Cool beans. The only thing I understand is 50% a year or 1% a month. I wish I was smart enough to follow the rest. Well, actually, you kind of are. You just don't know it. Because if you think about it, all right, everything you do has some way to relate to the stock market. Okay, the clothes you wear, the house you live in, the car you drive, the place where you get your groceries. All that comes back to the stock market somewhere. Your friends, your relatives, your neighbors all work at some type of a company that is directly or indirectly related to the stock market. How do you do it? Where do you put your money? Because at some point in time, when it's time for you to retire, you have two choices. Take control of your own money, do it yourself, or give it to someone else and have them do it for you. Okay? But more than likely, nobody has more interest in your money than you do. So you can choose to ignore it and pass it off to someone else, but then you give your money to a money manager. What are they going to give you every year? 4% draw? Okay, a 4% draw on $1 million bucks is $40,000 a year. Can you really live on $40,000 a year? And do you have $1 million? These are questions you need to ask yourself. How much do I need to invest? Pam, it's going to be totally up to you. Okay, Maria, Costco, really? Why would I want to look at Costco? C-O-S-T. Okay, Costco is going to be a no, and here's the reason. Okay, look at where it is. It's at the high of the year. What happens at the high of the year? Ask yourself, if you bought here, 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 or here, and now it's up here, are you going to sell and take those profits, or are you going to run the risk of it dropping? Well, I'll tell you one thing, okay? People who bought gold back in the 1980, 81, the gold rush, they call it the gold rush of the 80s. It went from $250 an ounce to $850 an ounce in about a year. Everybody was loving it. However, if you bought at $850 at the high of that time frame, you had to wait 3 decades. That's 30 years just to break even. So if you're buying here at $943 a share, okay, how do you know that's going to go higher? It's never been higher than $943. Okay? If it was, it would have done it already. No, I don't buy at the high. Sorry, that's going to be a no. How much do you need? I did that one. How can you tell if it's giving 1%? Lay, how are you today? Are they even more than one? Yes, they are. Marie, you got that? Okay, always stay within your budget. If you can't afford $900 a share, what are you doing here? Think about it. $900 a share, that's $90,000 for one. JWN, Nordstrom's, Brad. JWN. Now, I haven't looked at VC yet, VICI. We're going to get to that one next. Okay, Lay, how can I tell if it's 1%? All right, let's go to a simple one. AT&T. All right, you ready, Lay? The current price right at this moment in time is $22.36. For those who don't know, this screen behind me is live streaming on YouTube. If you're on your phone or your iPad, you probably can't see these little tiny numbers. That's why it's live on YouTube. You can actually watch it on your big screen TV in your living room or on your computer. That way you can zoom in and take a better look at these numbers so they make sense. So how can I tell it's 1%? $22.36. Read the number. 22.36. 22.36. You take that little point, 2 spaces over to the right, 2 spaces over to the left, and it's 0.22. So 1% of $22 is 22 cents. That's 1%. Just take the decimal point, move it over. 0.22, 22 cents. So the 22.50 is going for 0.14, not 1%. And do they have it higher? Well, yes, they do. Let me see if I have one. Okay. Intel, 2610, 26. Okay. 2610 is the purchase price for Intel. If I move it over 2 places, 26 cents is 1%. The 26 is going for 72 cents. That's almost 3%. So to answer your question, are they even more than 1%? Yes, they are. Okay, Intel, the 26 at the money, 72 cents, more than 1%. But it's actually a no for this coming up week. Why? Because it's at the high right now. What happens at the high? Profit taking and the stock comes down. So no, I wouldn't be buying that one. But that does answer your question, though. Can you take a look at Costco? We already looked at Costco. 86 Costco's out of the price range. Yep. How do you join your course or trading strategy? Apex here's up in the top left corner. You'll see my picture right there. It says Dividend Stock Talk. Click on that. That will bring you to my bio. All my information is there. Takes you to the website, The 10 Minute Trader. On there, it's like live trading. There's 2 buttons there. You really can't miss it. Live trading. How is Home Depot giving you 1% a week? I never said Home Depot was giving me 1% a week. Okay? But let's take a look at Home Depot. HD. Okay? Now, Home Depot at this current moment in time. Here's the 1-year chart. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down, up, down, up. It's going to the upside now. Home Depot is currently at $406. Okay, so what is 1% of $406? Well, that's $4. 1% is $4. All right? So what is it giving me this week? So at the money right here, $8.90. So Home Depot is actually giving 2% this week. 2%. What is 2% a week? 2% a week is over 100% a year. Okay? Okay, De Freitas. You ready for this? We're going to actually run through this one right here. 30 days ago, okay, take a good look. 30 days ago, Home Depot was at 410. It jumps up to 422. It drops all the way down to a new 30-day bottom way down here at 380. Okay, 2 days to the upside. You have plenty of space to go up higher to match the 30-day high. So I like the 30-day high and a 30-day bottom. It kind of gives me an idea of where the playing field is. So let's take a look. Before we do that, what does this company normally do this time of year? That is the seasonality. The seasonality shows us what does the stock normally do. January 1st, December 31st. Steady as she goes and right to the upside from January 1st to December 31st. Nice, steady upward climb. Home Depot. Currently, we're right here. So this time of year, let's zoom into that, get a better idea. Okay, so right there, the crosshairs, as you can see, there's today, right here, nice, steady, slow to the upside. Okay, but the big question is, do you like Home Depot? So let's take a look one more time. Okay, De Freitas, you ready for this? You ready? Watch this. Currently, the bid, 405. The ask, 406. Okay, I like the 407.50s. So we're going to do a 407.50 call strike. So we're going to buy the stock, sell the option at the same time. Watch how it gives you more than 1%. First I want to do is click right over here. See that where it says single open? Click on that, and that shows you all the different trading strategies. Okay, the simplest and easiest one is the covered call. Okay, remember I said I liked it at the 407. So buy that one. It automatically fills. Let's go to just one contract. Let's buy it at the market price. As soon as she opens up, here's what it sounds like. You ready? Buy one covered call, Home Depot 100s. That's the weekly. 15 November 24. That's next Friday. So if I'm buying it first thing in the morning on Monday, I'm selling the covered call so somebody has the right to buy it from me for the exact same price I paid for it. What am I collecting? I'm collecting $982 per contract. Okay? The 407.50 call strike against the Home Depot stock at the market to open. Now, my break even is $397. So as long as the stock stays above $397, it's currently at $406.99. So anything over $397 is going to be profit. Okay? The maximum profit, $982 per contract. So let's get the calculator. Okay, here's the calculator. First thing I want to do is clear that. Put the $982.50, which is the profit for one contract. Okay? See, it says right there, $982.50, one contract. Remember when I said I want simple, safe, predictable, and consistent? I know what I'm going to make off of this trade before I even do it. I'm not buying it and wait and see. No. I want consistency, predictability, and safety. Number one, Home Depot is a 100-year-old company. Number two, it is a dividend king. They have increased their dividends to their shareholders for more than 5 decades. That means they have been consistently profitable for more than 5 decades. Okay, I get all those going in my favor. Number three, the stock is at a certain point where it's going into an upward trend. And what does it do throughout the year? It consistently goes up this time of year. So I have all those things, all those factors going in my favor. So now let's do the trade. 982 is my profit. Cost of trade including commissions, $39,768. So let's divide it by 39,768. It gives me a grand total, you ready? 2.47% for the week. Do you have any idea what that means for the year? Great. Well, you multiply it by 52 because there's 52 weeks in a year. That comes to a grand total of 128%. if you can get 2.4% every week. I don't. I average 1% every week. I'm perfectly okay with 1% every week. That's 50% a year. I don't like spending my time in front of the computer. You may think I'm on the computer a lot. I'm not. Okay? I'm on 10 to 15 minutes a day with my own portfolio. Other people's stuff, well, I'm on a little bit longer because I help them out. Delete that. Let's get out of this. Let's go back to here. Let's go back to here. And what is next on the list? So, DeFreitas, that's how you do it. You find a good quality company. You make sure it's the right timing. Look at your 30-day high, 420. 30-day bottom, 383. Okay, 1-2 days to the upside. Look at all the upward movement you have. The 30-day bottom, now she's time to go up. Because at a 30-day high, there's profit taken. You get to the high, you're going to take profits. Well, I would. Most investors out there, they want to buy something, grab the profits. It's not a profit until you take it. All right? Also, nobody ever went broke taking profits. So what's wrong with taking a profit when it's there? Now, Home Depot's a great company. They have a dividend 4 times a year. So I look at Home Depot 4 times a year. That's it. I don't look at them in weeks they don't have a dividend coming up, because the dividend lets me know when the stock increases in value. Once you figure that out, once you're good at that, once you're good at getting 50% a year, great. Then throw in some other trading strategies, because there's a shitload of them out there. Now, this is the simplest and safest. Okay, you have other trading strategies that get you 100, 200, 300% a year, but they carry more risk. Remember, I created this specific trading strategy for my 9-year-old daughter back in 2008. All right, so she's 25 years old now, so things are a little bit different now. All right, so that's Home Depot. I do like Home Depot. Okay, was that Bloyd Index? Yeah, I just showed you Home Depot. Kohl's, we already did Kohl's. Uh-oh, I missed some questions. CVS, Tesla, uh-oh. Wow, I missed all these questions. Sorry, guys. What percentage a year is a good investment? Lay, I honestly can't give you that question. I can't answer that question for you. I know absolutely nothing about you. Seriously, I don't. For me, it's 1% a week, which is over 50% a year. That's for me. I know nothing about you. You want to have a conversation? Great. Drop your name in the DM. I will give you a call. We'll have a chat. Okay, you can ask people here in the comments. Does he actually call? Yes, I actually call. Drop me your number. I will give you a call. Suze, what's your top 5 stocks you're invested in? Macy's, Nordstrom, Kohl's, Intel, and Dell. Those are my top 5 at the moment. I'm thinking of starting to get it. At least the gist of it. Cool. Now, I'm here every single night. Simple questions. I'll be more than glad to have them. I need to explain to me like I was 9. Oh, I don't think you're going to like this. Are you ready? I fly to you too. Okay, are you ready? It's simple. Number 1, you ready for this? Get a list of stocks that you like. There's 9,754 companies. Fine. Find which ones you like. For me, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Those 5 lists right there will give you over 300 companies that are consistently profitable, consistently increase their dividends, and all have weekly options. No options? No thank you. No weekly options? No thank you. No dividends? No thank you. Okay? Simple. Okay? Second, put them into a calendar. You can go to Google, EX Dividend Calendar. There's a whole bunch of places online that will give you a EX Dividend Calendar for free. I just so happen to have one inside of Thinkorswim. Now, Thinkorswim was created by a professional trader for professional traders. That was Tom Sosnow back 20, 30 years ago. He sold it to TD Ameritrade. TD Ameritrade got bought out by Charles Schwab. So Charles Schwab owns this platform now. And yes, I've been trading with it for over 20 consecutive years. Francisco. So 2 weeks prior to the EX date, correct. Do you consider puts depending on the instrument and trading, correct? Highs and resistance or not? Okay, now don't get me wrong. When you're talking about cash secured puts, you're talking about the wheel strategy. We do the cash secured put first, then do the covered call. Yeah, I don't teach that here. All right? I'm a nice guy, but I have to draw the line somewhere. I'm here 2.5 hours every single night, teaching you, giving you whatever you need in order to get good at this one strategy. After that, there are whole bunches of strategies you can do. But why not start off with the simple, safe, predictable, consistent strategy called the covered call? It's simple and easy. What do you use as a filter? Technical analysis or more like Can Slim? Oh boy. I don't like Can Slim. Okay? There's an option. I mean, there's a trading group down in Sarasota. They teach the Can Slim strategy. And the guy who teaches it, nice guy, but he gets excited about a 4% a 4% return per year. Yeah. No, thank you. I like 4% a month. Okay, except me and him don't really get along. He doesn't like my ideas because he thinks it's too risky. Okay, I think risky is giving me a scalpel and tell me to, give someone brain surgery or cut out someone's spleen. That's risky. I don't know nothing about that. Okay, I don't know anything about certain things. I don't know anything about dentistry. That would be risky. Okay, I don't know anything about surgery. That would be risky. But trading stocks and dividends, yeah, that's not risky to me because I've been doing it for so long. I'm used to it. So I fly to you too. All right, number one, find a set of stocks. That's number one. Number two, put them to a calendar. Number three, only look at what is up for consideration for this week. Okay, understandable. Thank you. Francisco, you got it. So if it is currently the 8th, oh, that's right. It is Friday. So 9th, 10th, 11th, Monday. The only stocks I want to look at on Monday are these right here. Johnson & Johnson, KGC, NEM, AGNC, DD, Dow, Coca-Cola, and US. Nu Skin. Those are the only ones on this particular list. Remember, I got like 8 or 10 lists. But these are the only ones I want to look at. I don't want to look at these. I don't want to look at those. I don't want to look at these. I don't want to look at those. These are the only ones. 2 weeks before the EX date on a Monday. That gives a stock plenty of time to increase in value. Once it does the increase in value, you grab your 1%. You say, thank you very much. I'll see you again in 90 days. Because what's going to happen in 90 days from today or 90 days from here? Nu Skin is going to have another dividend. 90 days from that, Nu Skin is going to have another dividend. Every 90 days. There's 4 quarters in the year. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. 4 quarters in a year. Each quarter has 13 weeks, 1 through 13. The first week of the first quarter looks the exact same as the first week of the second quarter. Looks the exact same as the first week of the third quarter, which, you guessed it, looks the exact same as the first week of the fourth quarter. Every 90 days. If I'm looking at Chevron, CVX, every 90 days, 4 times a year, okay, this year it may or may not be a yes. Okay, next quarter it may or may not be a yes. Because just because the dividends are increasing, just because the numbers look okay, well, the chart may not look okay. Okay, so back to you again. 1, find your stocks. 2, put them into a calendar. 3, only pick what is up for consideration for this week. 4, look at the 1-year chart. Very first thing you want to see. The high, the low, where was it a year ago? Where is it now? Okay, where is it now? What direction is the movement? Up, down, sideways, up, down, sideways, up. Okay, currently right now, it's at 26.10. What is the closest strike price? 26.10, the closest strike price is going to be the 26. It's actually that easy. What's the 26 going for? 72 cents a share. Well, 72 cents a share is more than 3% of a $26 stock. Well, close to 3%. Okay? Do the numbers work? Great. Okay, so you know when the dividend is. You know it's a good company. Okay, now you know the numbers are right. So last thing you want to do is check and see if it's the right time to buy. High, low, what's the direction? Great. Now, that's the 1 year chart. Now I want to look at the 90-day chart, the last 3 months. High, low, where was it, where is it, what's the direction? Down, sideways, up, sideways, up. Okay, great. It's in an upward trend at the moment. That's the 90-day chart. Okay, 90-day chart only tells me what it has done in the last 3 months. Well, that doesn't really give me much to go on for the next couple of weeks because I want to be in Monday, out Friday. So the last 30 days. Okay, the last 30 days. 23, bottomed out, it was at 2150, shoots up to 2620. That's going to be a hell no. Reason being, it's at the high of a 30-day period. This is perfectly ripe for profit taking. What happens at profit taking? Stocks drop. Why would I want to buy something that looks like it's going to drop? So even though the numbers look great, it's not the right time. But I like it. So as she drops, I'm thinking 2 weeks from today, it will be a good opportunity to jump in. And I already have it written down in my book. So once you figure out that, then you actually make the trade by going to covered stock. The 26s are going for this right here. Get rid of that. Get rid of that. Just 100 shares. Okay, at the market. What does it look like? Here's what it looks like. Buy one covered call Intel 100s. That's the weeklies. Huge difference between the weeklies and the monthlies. 15 November 24. That means the option is going to become worthless at 4 p.m. on next Friday, the 15th of November. The $26 call option, because that's what we just talked about. What's the closest strike price? 26. Intel at the market to open. What's my profit? Well, my profit's only $63.50 per contract. All right, well, get the calculator out. $63.50 per contract divided by 2,537, because that's what 100 shares are going to cost. So I'm paying $2,500 to collect 63. What does that equal to? 2.5%. Well, 2.5% every week is over 100%. All right, let's get out of there. Let's get out of there. Let's get out of there. Let's get out of here. And let's go back to here. So I just showed you it twice. So hopefully that makes sense. Francisco, that is so simple that we don't even think about it. As we as a human complicate everything. Now, Francisco, what I was going to say is it was created specifically for my 9-year-old daughter back in 2008. And I have arguments every single night with adults. Adults have a tendency to complicate everything. Okay? Simple, safe, predictable, consistent. It is so simple, most people say it can't be that easy and they refuse to look at it. Okay? But it is what it is. Angelo. All right, wait a second. Realtor Sandra. InvestRight. What are your thoughts on O? Hell no. O Realty? No. Look at the numbers. Seriously, dude. Seriously. Look at the freaking numbers for O Realty. Not just the ones that you're getting a dividend every single month. No, not that. Okay, that's just a freaking screw with your head. Take a look at all the numbers. How long have they increased their dividends? How consistently profitable are they? What is their yield for the year? I can tell you right now, it's crap. In my humble opinion, of course. It would never make it for me. All right, so let's keep on going. What do you use to filter technical analysis or more like CanSlim? No. Okay, what I use specifically, 20 years of increased dividends. Weekly options. That's it. Just 2. The reason being, if a dividend is a portion of the profit, let's say it's 2%. Okay, they take 2% of all the profits and they hand them back to the investors. That's you and me. You buy a stock, you are entitled to a portion of the profits. If your portion of the profits increases every single year, well, logic, reason, and common sense says if they're increasing the dividend, more than likely their profits are increasing also. So why would you put your money in a company that's not consistently profitable? That just freaking boggles my mind. That's where it says, what the hell are you thinking? Seriously, this is your money. No one has more interest in your money than you do. So why would you put your money into a company that is not consistently profitable? It boggles my mind. Nobody can explain it to me in a manner in which I'll understand. I understand, but it just doesn't compute. Okay, so people want to take a look at VOO. Well, they've been in business for 2 years. Would you recommend any good monthly dividend stocks, or should I stay away from them? I honestly don't know anything about you, so I can't recommend anything to you. Okay, you want to send me your phone number, we can have a conversation, then maybe I can be a little bit more free to use my opinions. All right, Angelo Castillo, ¿Qué pasa, amigo? ¿Cómo está? I'm holding Tesla. Call option at 350 strike price. What do I think? I think I don't like Tesla. TSLA. Okay? Number one, you got the 350. All right? Take a look at the movement. We're here. What was that? Middle of August. From August, we're at 190. Now we're at 330. Ask yourself a serious question, Angelo. Seriously. If you bought it at 190 and now she's at 330, that is a 50, wait, is that right? 40. It is a $40 increase. $40 on a $190 stock. That is a 20%. 20% in what? 2.5 months? So here's the question for you. If you don't take your profits when they are there, that's on you. Because nobody ever went broke taking profits. That's number one. Number two, could it hit 350? Yeah, it could. Is it going to? Don't know. Ask yourself a question. If you had a stock, it went up 20%, would you take that profit or would you let it ride? That's a question. I would actually love to have a conversation with you if you wouldn't mind. I'm 16 and have been investing for 3 weeks now, and would love to have a call with you if you are serious. I'm serious. However, you're 16. I cannot talk to you. Terribly sorry. All right? If you're really on a conversation with me, you're going to need to get your parents' permission, and they are going to need to talk to me first before I can talk to you. Okay? I'm just a random guy on YouTube. I don't know anything. You don't know anything about me other than the fact I'm here. I have a lot of stuff online. You can search me. Okay? Fair enough. I'm glad you appreciate that. But if you are serious, really serious, have your parents contact me, and I will have a chat with them, and you can be on the phone at the same time, and you can ask your questions with your parents' supervision. Sorry, I'm a parent myself, and I have grandchildren also. I would not feel comfortable, my children or my grandchildren, talking to some strange guy. And I'm as strange as they come. You know, your parents ever say, don't talk to strangers? Dude, I'm as strange as they come. Yeah, I'd love to help you out. Seriously, I would. But I'm not going to unless I have your parents' consent and they are on the phone with us. Okay, I'm glad you appreciate that. All right, what do I think about filters? I already did that one. Angelo answered that question. It ain't a profit until you take it. Okay. Ivan, okay. Ivan's talking about the Discord that we have. We have a lot of good people in Discord. Now, I show one strategy here, only one. But in my Discord, we do all different kinds of strategies. Okay? Seriously, all different kinds. What about applied materials? We the people. Oh, I love that. Just we the people. In order to form a more perfect union, gotta love those words. AMAT, applied materials. Now, AMAT, Applied Materials, is also a dividend king, also in business for over 100 years. Great, let's take a look. The high, 255. The low, 140. She goes up, she goes down, and now she's going sideways at 192.58. The closest one's going to be the 193. They don't have them, but they do have a 192.50. And look at this, 570. That's over 2%. Where can I find your Discord? Okay, the Discord is part of the paid service. So part of the live trading group is access to the Discord. Okay? Everybody pays the same to be in that group. Because I have a firm belief in those who pay attention. It has nothing to do about the money. I could care less about the money. Those who pay attention. If I give you the information for free, you do not value it. Sorry, that's a firm belief that I have. All right, applied materials. The bottom of the year, 142.65. The top of the year, 255.89. She drops down, going sideways for the last few months. Check it out. Here's your bottom, here's your top. Sliding sideways. That's what you call channeling, staying within a certain channel. Okay? You buy low, you sell high. You buy low, you sell high. You buy low, you sell high. It is actually that simple. Adults have a tendency to screw things up because they don't want to admit that something is so easy that it's 9-year-old. It was created for a 9-year-old. All right, so let's keep on going. Cassie Nix, how are you today? Okay, I'll look into that. Okay, glad you will. So, applied materials. As you can see, the last 30 days right there, here we go. Here's the last 30 days. Now, I love the last 30 days because it gives me an idea of what the investors, that's you and me, what were you thinking? 30 days ago, we're at 200. Okay, jumped up to 215, drops down to 180, up, down. Now she's going to the upside, but wait a second, look what happened on Friday. Could that be the start of a decline? Could be. So let's wait until Monday, see what happens on Monday. All right, so let's continue. What's next? 80s music. Can you share your stock calendar for this month? I already did, dude. Seriously, you can't see that? There it is right there. Okay, this is live on YouTube. You can go to YouTube and you can review it. I have 125 shares of DCA at 10.50. Okay, what the heck is DCA? Wait a minute, DCA, dollar cost average. What was that question? Oh, my thoughts on SoFi. Oh, man. Why didn't you ask me that before you bought it? SOFI. Okay? SoFi Technologies, Inc. 1301. There is no dividends. There are no yield. No dividends, no thank you. You're investing in a company that doesn't share its profits. They're looking for capital appreciation only. Okay, so you buy the stock, you wait for it to go up. That's what SoFi does. You buy it, it goes up. Do you know when to buy it? No. Do you know when it's going to go up? No. Okay, too many variables. I'm a lazy trader. I have no problem admitting it whatsoever. So let's keep on going. Calvin Hill joined. Hey, Vice Man, thank you. You're welcome. What about REX? Realtor Sandra, how are you this evening? REX. Now, be 100% honest with you, Realtor Sandra. I never heard of it. So if I've never heard of it, more than likely, it's going to be a no. So let's take a look. REAX. No options. No thank you. Uh-oh. REAX. Oops. REAX. Yeah, sorry. Monthly? No. 660, the 750 is going for 0. Yeah, no. The numbers just don't work with monthlies. All right. Fabulous by Harzan. Harzan? Walmart, huh? WMT? WMT. Yeah, dude, that's going to be a no. All right? She's actually at the high of the year. Ask yourself a question. Why buy at the high and wait for it to go higher? What about Wayfair stock? Does it have 20 years of increased dividends? Seriously, does it? If you're going to invest money in a company, don't you think you should know what it does? Think about it. Would you buy a car if it didn't have tires? Would you buy anything if it's missing a very important component? You should know before you buy anything how are they handling the company? Ford Motor Company. I like Ford Motor Company, but let's take a look at Walmart. Well, Walmart's already a no, all right, because it's too high. Okay, Ford, high, low. Where was it? Where is it? Okay, up, sideways, up, big drop, sideways. It's currently at 10.98. The 11 is going for 13 cents. That is over 1%. That's a yes. If you like Ford, the very first thing you should ask yourself, number one, does it make sense? Ford has been in business for over 100 years. That is the only car company that didn't take money from the government when they had the financial crisis. No, we're good. We don't need your money. Okay? How much do you need to invest to get started? Okay, Pam, you've already asked that question. Okay, my grandson started his account with $50. Okay, I would suggest people don't put any money into it. Paper trade for a while until you get the hang of it. Don't put your money at risk until you understand what you're doing. Okay, I have a lot of traders that trade paper trading before they put real cash into it. DCNYC, DC, New York City, how's it going over there? Cool beans. All right. So that being said, Walmart, no. I don't like Walmart because it's just out. No. All right, let's keep on going with questions. Oh, I got 53 more questions. Andrea, Apache, huh? Oh, I don't know. It's a dumb question. Paper trading. Oh, what is paper trading? You ever play Monopoly? That's paper trading for real estate buyers. So, paper trading, stock market, paper trading, you're not risking anything. You're learning. Why should we buy 2 weeks before the dividend pays? Because 2 weeks before the dividend, the stock has a tendency to go up. What date? Seriously. Okay, let's go here. Let's go here. Let's take a look at Johnson & Johnson. Here we go. J&J. Okay, so, Lay, you ready? Here's Johnson & Johnson right here. Okay, this is where they pay out a dividend. $1.24 per share. Say for every share you have, you get $1.24. Right. Now, you know when the dividend is. If you want to collect the dividend, you have to buy it before this date. The 25th, the 18th, the 21st, the 30th, the 6th, the 4th, the 7th, the 22nd, any day before this date to capture the dividend. Now, if you want to buy the stock, why are you buying it? That's a question. I buy for cash flow. So, if I know the dividend is being paid here, and this company's stock increases before the dividend is paid, when is the right time to buy? 1 day? 5 days? Okay, 3 weeks? 4 weeks? When is the best time to buy? Okay, historically speaking, I've been doing this for a long time. It's been around 10 days. That's 2 weeks. Okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The 12th. 10 days before. Historically speaking. But I like to buy on a Monday because that, on a Monday, gives me the highest rate of return when it comes to selling a covered call. Because selling a covered call, I'm selling my rights to that stock to someone else. A certain price by a certain date. Any thoughts on ETF SCHD? I've heard a lot about it. Yes, you've heard a lot about it because it's a piece of crap. And the only way you can sell a piece of crap is to talk a lot about it. Check the numbers. Seriously, how many years have they increased their dividends? How many years have they paid dividends? Are they consistently increasing or decreasing? Okay. How many years have they been in business? What is the average annual yield? If you're putting your money into that company, what have they done consistently year after year after year? What are they paying this year so far? These are simple, easy questions that you should know before you buy anything. They're called fundamentals. Where's the high of the year? Where's the low of the year? How has the stock consistently reacted from January to December every single year? Important questions. You should know this. So, Lay, I'm hoping that answers your question. Okay, if you like a dividend stock, you want to collect a dividend, you buy it any day before this date. If you want to buy it for cash flow and the strategy that I'm teaching you, it's 2 weeks on a Monday. Now, that being said, you can buy it anytime you want. You can buy it on the 28th. You can buy it on the 7th. You can buy it on the 11th. You can buy it on the 22nd. You can buy it whenever you want, but always work the equation backwards. What do I mean by that? What do you want from your investing? You want to double your money? Great. What strategies are there to invest your money and double it? Well, you're missing some parts to that question. What's your time frame? The better question you have, the more exact details you can have, the better results you're going to get. So you want to make money in the stock market? Great. Buy a stock, wait for it to go up. That's generic. You can buy anything and wait and wait and wait and wait. It might go up. But if you want consistent, predictable 1% per week, what trading strategies are available for that? Well, let's throw in a couple more parameters. Simple, safe, predictable, consistent, no way to lose. There's 5 criteria right there that I had to figure out to teach my 9-year-old daughter how to trade. Simple, she had to be able to grasp it. Okay, she's not an adult. She doesn't understand all that stuff. She doesn't understand implied volatility. She doesn't understand the Black-Scholes pricing methods for stock options. She doesn't understand intrinsic value. She doesn't understand the delta, the vega, the gamma, all that shit. Okay, the RSI index, the Fibonacci retracement. She doesn't know any of that. So when I say simple, great. Well, here's Monday. What stock is paying a dividend in 2 weeks? Johnson & Johnson. Cool. Great. Let's look at it. Where's the high of the year? Where's the low of the year? What direction is it currently going? These are something easy for a 9-year-old to understand. You take a look at the calendar. Well, Monday's the 11th. What's in 2 weeks? Well, the 25th, 26th, 27th, 28th, 29th. What stocks are available that week? Okay. We got Johnson & Johnson, Newmont, eBay, Heinz Ketchup, Coca-Cola. You probably heard of every single one of those. So there's 5 companies right there. So you take those 5 companies, you throw it into a chart. Why into a chart? Well, because you want to see what the hell it's doing. NEM, Newmont. Okay, very first thing you want to see. Okay, where's the high? Where's the low? Where was it a year ago? Where is it now? What direction is it currently moving? Just take your finger and trace it. Up, down, up, down. That's not that difficult. A 9-year-old can figure it out. That's why I showed her how to do it. Well, great. Well, how do you look closer? 3 months, 90 days. 3 months. Okay, November, October, September, August. Okay, right there. You put the cursor on August, click left, drag right. Well, there's the last 90 days. Where's the high? Right there. Where's the low? Right there. Where was it 90 days ago? Right there. Where is it now? Right here. What is the movement? Take your finger. Up, down, up, down, up, down, up. Simple. Why complicate it? Next, 30 days. Well, if today is the 8th, I want to go to the 8th 1 month ago. That's right there. Same thing. High, low, was, is. 30 days ago, we're at 53. We went to high at 58.5. We dropped all the way down to 44. Now we have 2 days to the upside. Okay, Wednesday was the 30-day bottom. Thursday was higher. Friday was higher. That is usually an indication that it is at the bottom and starting to go back up. Okay, stocks go up until they stop, and then they go back down. Until they stop, then they go back up, until they stop, and then it's actually that simple. It's like a seesaw. Up, down, up, down, up. That's all they do. They do not come to your house, do not make your bed. You know those little candies they put on the pillows? Yeah, no, stocks don't do that. Do you invest in growth stocks? Okay, I don't look at it that way. I look at specifically, has the company increased their profits for 2 decades or more? If they're a growth company, really don't care. I honestly don't care I can't really say that. Sometimes I do. I like to stay away from certain stocks that I don't agree with their methodology. But still, my main concern, consistent profitability. Okay, if they're consistently profitable, that's where I want to put my money. I don't read the quarterly reports. I don't look at the annual reports. I don't pay attention to the earnings. Should I sell or buy more ExxonMobil? Pablo, how are you doing? Okay, can't come up with an original name. The name Mama gave you not good enough. You had to use Pablo's name. Anyway, let's keep on going. Alrighty. Let's keep on going. Saint 1470. How do you get the calendar on Thinkorswim with the top stocks list? Okay, Saint, all right, with Thinkorswim, top right here, it says monitor, trade, analyze, scan, market watch, charts, tools, education, help. You can go right to the help part and they say, how do we do it? They'll tell you. But right here, the market watch. Click on the market watch. On the market watch, let me go here. Okay, under market watch, quotes, alerts, visualize, finance rates, calendar. Okay, market watch, calendar. How do you get the stocks in that list? Well, you come on all the way over to the left-hand side to the watch list. Okay, the box right next to the watch list. Come all the way down. Create your own watch list. Give your own watch list a name. Import all your stocks. Hit OK. And then hit save. Then, let's get out of there. Then, when you're over at the market watch, you come and hit the little star or the gear, whatever you want to call it. And then you come down where it says personal. This is my personal list. 100-year-old stocks, calendar spreads, dividend kings, dividend aristocrats, dividend champions, Warren Buffett's list, blah, blah, blah. And that will put all your stocks in there. Okay, here's all the dividend champions. Okay, it's really not that difficult. Allie, Apple has never been good to me. I always seem to go in at the wrong time. Allie, I'm sorry that happens to you. AAPL. Thank you for being so good inside the news, blah, blah, blah. You're welcome, Francisco Sesco. Have a nice night. Allie, here is the chart for Apple. All right? Sit tight for a second. It's not that difficult, Allie. Here's the high of the year. Here's the low of the year. A year ago, it was right here. Now it's right here. Take a look at the momentum. Take your little finger if you need to. Up, down, up, down, up, down. That's all it does. Okay, right now, if we come over to here, okay, the high right about here, 235, she came down to 220. Now she's going back up again. Okay, they go up, they go down. Follow the stocks that you like. Now, I look at stocks all the time. Twice a day, once in the morning with my private morning trading group and once at night with you good people. Now, at this moment in time, here's your 30-day high. Okay, that was on the 19th. She went down, she went up, she went down. Here's the bottom right here. You cannot argue with this, Allie. That is the 30-day bottom. 1, 2, 3, 4, 5 days ago. That was Monday. That's the 30-day bottom. Tuesday was higher, Wednesday was higher, Thursday was higher, Friday was higher. The high of the 30-day period is 238. Look at the space between here and here. Once you're at a 30-day high, more than likely there's going to be profit taking, and profit taking brings the stock down. What is the minimum portfolio you recommend to start your strategy? Okay, user 527019015773665. Why can't you just have a regular name, dude? Like Peter, Ted, Oscar, Fred, or even Velma. That's a name too. Anyway, there is no recommended minimum. There isn't. I always tell people never put real money in. See, as you can see right here, this is a simulated trading account. This is not real money here. Okay? But this one is, and this one is. Okay? Now I have 6 different accounts. I share everything I know on this account because this is where all the good information is. All right? So I have like 6 or 7 accounts, but I only share 3 of them with you guys. Never start something you don't understand. If you don't understand it, paper trade. Find a group of people that you trust, that you want to learn from, and then learn as much as you can. And go to YouTube, absorb the information. It's really not that difficult. Andrea, CVS. Davy Expressions. How did you learn about this? Do you buy stocks when they're low, hoping they'll go up? Okay, Davy, I actually been doing this for 20 years. Okay, I owned a manufacturing company. Believe it or not, I used to be a CEO. And had a bunch of employees. So once you're in that position, they start throwing whole shitloads of money at you. Well, you can only buy so many things. You can only do so much, and then you can figure what the hell you do with the rest. Well, I tried real estate. I tried collectibles. I tried art. I tried a lot of stuff. But the stock market was simple, was easy. I could do it from anywhere in the world, and I didn't have to constantly watch it. It was simple, it was easy, and everything is right there. This is the American economy. You, your brother, your sisters, your aunts, your uncles, your cousins, the guys down the street, they all work for a company. Would you say V is a good stock? That you say good in now, how to get down to stock? Okay, V is not bad. Okay? But there's a difference between being a good company and being a good company in which I want to put my money in this week. Because I don't want to put my money in this week unless I can have my money back next week with a profit. That's what I'm looking for. A profit every single week. What is the minimum portfolio? Okay, I don't know that one. What is the minimum? Okay, you asked that twice. Okay, why do you ask the question, same question twice? Okay, Andrea, let's take a look at CVS. Andrea wants to look at CVS. Yes. First thing, always, always, always. High, low, was, is. What's the direction? Up, down, big drop, sideways, up, down. 55.90. The 56 is the closest one, 61 cents. That is more than 1%. Well, great. It's more than 1%. Wonderful. Let's take a look. The last 30 days, where is this thing going to go? Well, right there is the last 30 days. 30 days ago, we're at 66. Jumps up to 68. Drops all the way down to 54. Wednesday, big jump. Yeah, big jump means profit taken. Okay? Yesterday and today, profit taking means we're going to have to wait for it to find a new bottom. Because the previous bottom was Tuesday. Okay? Now we have to wait to find a new bottom. Because she jumped up to 63. Okay, now there's profit taking. Once the profit taking is done and over with, jump back in again. Alrighty? Keep on keeping on. Joseph. Alrighty. Sorry that you got smoked today. User, what price are you going into Dell? Done like 8%. Okay, user, no name, Dell. D-E-L-L. I like Dell. I do. Let's take a gander at it. You ready? Here's the high. Here's the low. Here's where it was. Here's where it is. Check this out. $70 jumps up to 180. That's more than 100% increase. You know the Pyramidal effect? No, never even heard of it. Okay, 180, she drops down to 90. That's a 50% drop. Check this out. Over 100% up. 50% down. Back up to 140. And from 90 to 140, that's $50. That's more than 60%. Okay? So from 70 to 180, that's 150%. Okay? 150%, down 50%, up 60%. Okay, so that's Dell. Now, we're currently at 34.69. 134.69 to 135 is going for 258, more than 1%. Well, I'm going to head out, but thank you, sir. Hope you blah, blah, blah. Streams, thank you. Okay, I'm here every night, dude. You want to come back? I'm here. Ask you questions. Not a problem. So the last 30 days. Yeah, this is going to be a no. Reason being, your 30-day high was 3 days ago. Wednesday. Thursday's down. Friday's down. Mr. Ibad, how are you doing today? I don't know you, so it's going to be a no. I got a lot of people want to co-host. I have no idea who they are. Why would I co-host with someone that I have no idea who they are? Doesn't make any sense to me. All right, so Dell is going to be a no. 30 days ago, here's your bottom, way over here, 112. Shoots up, pulls back, shoots up, now it's starting to pull back. It's that simple. See, 30 days ago, you're here at 112. Now you're at 140. It's not a profit until you take it. Once you start taking your profit, the stock starts to drop. When it's done dropping, she'll turn around and go back up again. Well, great. At that point, then you buy it again. Okay, Mitchell, Levine, PLTR, no dividends, no thank you. Okay, user, at what price am I going into Dell? I'm not. D. Arnold, what is the best way to start? It's a mind game. Very first thing, you've got to change your mind because you're going to be doing stuff that is against everything you have been told. Everything you've been told, buy low, sell high, well, that's what you're going to do. But you're not investing for annual returns. You're investing for weekly returns. And that's very challenging for someone to get their head around. Also, most people want to buy a stock, and as it's going up, they don't want to sell it. They think it's going to continue. Now, number one, Orlando, number one, don't think you're anyone special, because you're not. You're going to buy a stock and you automatically think just because you buy it, it's going to go up and continue. No, that ain't going to happen. You're going to buy something, it's going to drop. You're going to buy something, it's going to go nowhere. You're going to buy something and it's going to shoot up. Yeah, the scenarios are endless. So get it in your head what you want first. Now, I want simple, safe, predictable, consistent 1% per week. That's it. So if I buy it here and it shoots up 20, 30%, I honestly don't care. I'm happy for whoever bought the option from me. I'm just looking for my 1% every week. Now, Dell is a good company, but I only look at Dell once every quarter, okay, just before they pay their dividend. Because when you know the facts, a stock has a tendency to go up just before the dividend date. Once you know the dividend date, that's when I want to take a look at the company. I take a look at the company. If everything's in line, if it's heading to the upside and the numbers are working, great. Then I jump in. If not, I move on to the next company. I don't get emotionally attached to anything. Okay? Because you've never seen a hearse go by with a U-Haul. If you think you're taking it with you, you're sadly mistaken. Okay? Jump in, get your profits, say thank you, I'll see you the next time you have a dividend coming up. Because guess what? 90 days are going to pass and Dell's going to pop up again. If it doesn't make it that time, well, guess what? 90 days are going to pass and it's going to pop up again. It goes 13 weeks in a quarter. Week 1, week 2, week 3. Once you get to week 12, week 13, guess what pops up next? Week 1, week 2, week 3. And guess what happens when you get to 12 and 13? Week 11, week 12, week 13, week 1, week 2. It's the same thing over and over and over again. It's almost like work. Okay? Saturday and Sunday, you party up, you have a good time. What happens on Monday? Back to work. Monday, Tuesday, Wednesday, Friday. Day off, day off. Monday, Tuesday, Wednesday, Thursday, Friday. Day off, day off. Monday, Tuesday. It's the exact same thing. Ain't no different. What is this one? Hospida de Cara. Are we breaking 600 and SPY before December? Don't know, don't care. It's not on my list. Okay, you seriously got to take a look at those numbers in Spider. Seriously, dude. Spider's paying less than 2% a year. Why the hell are you looking at Spider? Take a look. Seriously, take a look at the dividends. Now, they've been paying dividends for decades. Seriously. They do have over 20 years of dividends, but they're not consistently increasing, which means they're not consistently profitable. which means the yield on them is absolutely horrible. You know what? Let's take a look, just for the fun of it. SPY. Okay, before I show you what the yield is, actually it doesn't even have a yield. Yes, it does. Okay, check out the yield. 1.23%. 1.23%. What the hell are you thinking putting your money into something that's giving you 1.23%? If this is the way you feel about money, just put in freaking treasury bills. Treasury bills are paying 5%. You can quadruple, did you hear that? Quadruple your returns by getting it out of the spiders and put it into T-bills. T-bills are paying 5%. Spiders are paying 1.23. I didn't go to college, but I do know that 5% is better than 1.23%. Seriously. I can get my grandson to tell you that 5 is better than 1.2. And he's only 4 years old. You're an adult and you're putting your money into 1.23? Yeah, sorry, dude. That's a no. That's a hell no. That's a freaking what the hell you thinking. Abe, BKNG. Now, Abe, don't feel bad about this. BKNG. If I never heard of it, it's usually going to be a no. Okay? Usually. Booking Holdings. Really? Dude, what are you doing here? Seriously. If you're looking at a stock that's $4,900 per share, you're definitely in the wrong group. Dill Pickle, how are you? Are there any new companies you would recommend to look at? No, I don't look at new companies. I look at companies that have 20 years of consistent increased profits. Okay, Andrea, we already looked at Kohl's today. Sorry. Madison, H-I-M-S. We looked at this one a while ago. H-I-M-S. HIMS. Okay, interesting. However, HIMS. Let's see how consistently they are with their dividends. No dividends. Sorry, Madison, no dividends. No, thank you. All right. Real to Sandra, we already looked at Reacts. And it was a no 15 minutes ago. Ain't going to be any different now. We the people! You missed my previous message about AMAT and Valero. Now, we already looked at AMAT. Now, Valero, that's a good one. VLO. Valero. High, low. Where was it? Where is it? What's the movement? Up, down, up. She's turning right here. However, take a quick look at the last 30 days. All right? I got a minor issue with this, my dear. Okay, 30 days ago, we're at 142. We jumped up to 144. We bottomed out at 127. Okay, 1, 2, 3, 4, 5 days going to the upside. Wednesday, she jumps up. Look at that big gap. Now, gaps have a tendency to fill. Do you know what that means? Well, you can't just pass it. Okay, she's coming down now. So, Valero just going to have to wait until she finds a new bottom before you jump in. Now, you don't have to listen to me if you don't want to, but I wouldn't do it until she drops back down and then jump in. I'm looking at about 2 weeks, and it might be a good one. So I'm going to write Valero, VLO, and I'm going to look at it again in 2 weeks. MPW. Daryl wants to look at MPW. Now, I like MPW, and I actually have some MPW, but that's neither here or there. But let's take a look. High, low, where was it? Where is it? Look at where it was a year ago. Look at where it is now. Exact same spot. Okay? It went up, it went down. It went up, it went down. It went up, it went down, and now we're back to starting again. So what is the point? Exact same spot. If you didn't buy and sell in this time frame, okay, she went up, you could have sold. When she dropped, you could have bought. When she went up, you could have sold. When she dropped, you could have bought. When she went up, buy, sell, buy, sell, buy, sell. Up, down, up, down, up, down. That's all stocks do. A year ago, it's the exact same spot where we are right now. But that's neither here or there. Bowman, 302. What's happening? All right. Last 30 days. Oh, take a look at this. Isn't that pretty? 30 days ago, 5.6. Okay? 30 days ago was our 30-day high. Yesterday was our 30-day bottom, 420. Okay? Today, 1 day to the upside. I like 2 days to the upside. So I'm going to wait until Tuesday because I want to see what she does on Monday. Okay? But at 491, the closest is going to be the 5, and the 5 is going for 13 cents a share. 13 cents a share is over 2.5%. Bowman requests to be in your live. Bowman, I don't really know much about you, but let's hear what you got to say. All right, let's hear what you got to say. I have no idea how to do it. I just pressed OK, so let's see what happens. Oh my goodness. Hayden, you honestly didn't just ask me about that piece of crap JEPQ. JPEQ, yeah, no. Hell no. Double hell no. Okay, so Hayden, I would really implore you, I would beg of you to check the numbers on JEPQ. How long have they been in business? How consistent are they with their dividends? Have they consistently increased their dividends? Easy N, how you doing? What is their rate of return on an annual basis? Is that consistently increasing? Is that decreasing? Where are they? Okay, I've looked at the numbers. I know what JEPQ is. It's a hell no for me. That's for me. But if you like it, more power to you. I'm not going to waste my time looking at it. C. Karat, how are you today? You do options, futures? I don't do futures, dude. Okay, I used to years ago. There's no consistent predictability to them. Sorry. How do you know at what point in the high you should buy? I don't buy at the high at all, dude. Never. I stay away from the high. Okay? High's here 30 days ago. She drops, the 30-day bottom's right there. That's where I like. What are futures? I'm not going to get into that conversation. If you don't know what futures are, there are a lot of videos out there that'll tell you and explain to you what a future is. But it's not something that I do here. Okay, high, she dropped, went sideways. Here's the bottom right here for a 30-day period. Okay, if you're going to make an investment, you're looking to get a rate of return. What is your rate of return? Well, it's different for everyone. Me, I like 1%. Some people want 20%. Some people want 30%. Some people want 100%. It all depends. We're all different. Okay, Bowman wants to take a look at Cisco and Verizon. Would Verizon be a strong candidate selling cash secured puts? I'm not 100% sure about that. No. Because she's actually falling. Look, it's at a, 60-day bottom right now. Okay, if you want a secured put, wait for it to stop. Wait for it to stop going down, to turn around, and as it's going back up, then sell cash secured puts at the money. It's the highest rate of return, and as she goes up, the value of that cash secured put dissipates into nothingness, and that's like free money. Hope that works for you. All right, Zelma, I am preparing to do a fund. I am, seriously. But I'm waiting to have at least 2 years worth of statistics that can be verified by everyone. At this moment in time, here we go right here. Here's all my trades this year. Okay, you can pick any one. All right, each one's weekly. This is week 23, the 10th week, second quarter. All right, May 28th. Intel, Marathon, Win, Kohl's, MPW. What did I make that week? That week was 0.6. That's less than 1%. I don't make 1% every week. Almost every week. Okay? But my rate of return so far this year on my 3 different accounts that I share with you guys. Account 1's up over 82%. Account 2's up over 80%. Account number 3's up over 20%. But that's only 6 months. Hey James, how soon before dividend payout would you buy? Wait, Mark. how soon before the dividend payout would you buy, and how soon after the payout would you sell? Here's the thing, Mark. I buy 2 weeks prior to the EX date. That's not the payout. That's just the EX date. There's 4 dates to remember when it comes to dividend stocks. So let's take a look at them. Let's get out of there. Date number 1 is the announcement date. That's date number 1. Date number 2 is the EX dividend date. That is the last day the stock trades before the dividend is paid out. Date number 3 is the date of record. Whoever owns the stock on that day is entitled to the dividend. That's date number 3. Date number 4 is the payment date. And that could be anywhere between a week or 6 weeks after the dividend. Okay, so very important to understand, if you want to collect the dividend, you have to buy it before the EX date. 1 day, 5 days, 10 days, 20 days, it's up to you. Me personally, I buy 2 weeks before the dividend date. Okay, Coca-Cola on the 29th, 2 weeks is the 15th, on a Monday is the 11th, okay, which is this coming Monday. If I want the dividend on Coca-Cola, I would buy it on Monday because it's 2 weeks, okay? 1, 2, 3, 4, 5, 1 week, 1, 2, 3, 4, 5, 2 weeks on a Monday. Because on a Monday, you get the highest return on time value when it comes to selling covered calls. Okay, if 80% of all call options expire worthless, I don't want to be a buyer. I want to be a seller. Okay, L. Cox, what amount is reasonable to start with? I honestly can't tell you. Okay, because you're different than I am. Okay, I started out in the late 90s, 1990s with, I think it was 12,000. Gotcha. You got it, Mark? All righty. How do you know at what point in the high? Okay, I don't buy at the high. Okay, sorry. I buy it just as it's bouncing off the low. Where do you find the dividend date? L. Cox, where do I find the dividend date? In the dividend calendar. You can go to Google, EX dividend calendar. Okay, a whole bunch of them will show up. It just so happens this trading platform has a calendar in it. There are a lot of trading platforms that have calendars in it. You just have to figure out which one you like. I like Thinkorswim because everything I want is right here. What dividend stocks do you like right now? The Can Man, how are you doing today? So Zelma, yes, I am starting a fund. It takes anywhere between 3 to 6 months to start a fund. And the stock list I showed you, all my trades, will be 1 year at the end of the year. That's a whole year of my dividend trades posted online for everyone to see. Okay, and they're all recorded. Okay, every single trade I have made this year, this screen right here behind me, this is live on YouTube. It is being recorded as we speak. All right, so as we speak, we are recording everything I am saying. So if all my trades are recorded, then investors can actually take a look at my strategy. And if the insurance company that I join with can guarantee all the investors a minimum of 20% returns, well, great. It'll be great as a fund. But it takes time. Damon, the SPY went up so much this year. Yeah, and I thought Microsoft was on the rise, but it seems to level out around 423. And what does that mean, Tucker? Can Man, what dividend stocks? Okay, I like a whole bunch. Good evening, Adam Devine. Dude, I'm just getting ready to leave. Actually, I'm past time to leave. I'm going to finish up with the last of the questions and I'm out of here. So anyway, Tucker, I only look at stocks. Okay, hold on a second. Let's take a look at MSFT. MSFT, Microsoft. Let's get rid of this. Okay, Tucker, are you ready? Microsoft. A year ago, we're down here at 360. She went up, she went down. She went up, she went down. She went up, she went down. Up, down, up, down, up, down, up, down. Why the hell are you just holding on to it? Seriously, ask yourself the question. If I buy when it's low, sell when it gets high. Buy, sell, buy, sell, buy, sell, buy, sell. If you're holding on to it, the only thing you're collecting are dividends. Because what happens when it's at a high? It comes back down. You lost all that possible profitability because you held on to it. Okay, so as she drops, as the people up here saying, I'm taking my profits, take the profits, the stock drops. Great. They sold, they got their profits. Now it's down here again. Now she turns around and starts going back up again. That's where you buy. And when it gets to a certain point, you sell, you take your profits. If you're holding, expecting this thing to go from 470 to 9,000 or 12,000 or whatever the hell you think, yeah. Okay, you get so many people going against you. All right, so people who bought it here last year at 360, if you didn't sell when it hit 460, that's your own damn fault. It ain't a profit until you take it. If you're buying it to hold on until you retire, well, look at a year ago. A year ago, it was at 360. Now it's at 422. It's up $60. Well, $60 on a $360 stock, that's 20%. Okay? 20% in a year. The SPY went up so much this year, honestly, really don't care. SPY does not fit my parameters. Okay? From 430 to 598. Is there an AI I can use for trading? Yes, there is. Handy Den. Hayden, JEPQ. Yeah, hell no. We the people. I'm dropping my phone in your DM. Would you please give me a call tomorrow? I can give you a call tonight because I'm getting out here now because I think we're all done. Oh, almost. How do you learn? One thing at a time. Do you do morning trading? What about Walmart? Walmart's a no. Okay, Walmart. The reason why Walmart's a no, WMT. Looks almost just like the spiders, doesn't it? Went from $50, now it's at 84. It's at the high of the year. When have you ever heard somebody say, it's an awesome idea to buy at a high and wait for it to go higher? When have you ever heard that? I've never heard it. I've always heard you buy low and you sell high. So why the hell would I buy at the high of the year? Okay, as she comes down, like she does, look, she went up, she went down. 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 She went up. She's going to come down again. Wells Fargo. Tucker. What's on the screen now? Walmart. Do I have morning training? Yes, I do. Cake. Let's talk about cake. California Ninja Lawyer. Let me explain it to you in simple terms you lawyers can understand. Now, how's that? Okay, Cheesecake Factory does not have 20 years of increased dividends. Sorry, I meant how do you decide what point of the high to sell? I always want to wait and push it. Everybody does that. Okay, nobody wants to buy it here and sell it here. Nope, they want to wait until it goes way up there. Okay, it's a 50-50 shot. Okay, I sell it, it goes up. I sell it, it goes down. 50-50, which way is it going to go? But let me tell you one thing. Nobody ever went broke taking profits. And there's always going to be the opportunity. How about Amazon? Let me ask you a question. Ken Man. It's a serious question. You ready to see how quick you are to answer this one? How consistent does Amazon increase its dividends? DeBrain, how are you today? Dennis Mancini. Dude, I'm just getting ready to sign out. Seriously. But I'm glad you showed up. Thank you for saying hi. Okay, so user. I'm 60 years old. I'm retired. I want a simple, safe, predictable, consistent 1% per week. Okay? If I buy here and she goes up 1%, I'm out. I honestly don't care that it does this. Do you know why? Because there's 9,754 companies all wanting my opinion. Okay, if I jump into this one, get my 1%, great. What's on the list for tomorrow? Get my 1%, great. What's on my list for tomorrow? Great. What's on my list for tomorrow? Exactly, Kenman. No dividends, no thank you. Sorry, I want cash flow. The only way you're going to get cash flow out of Amazon is to buy it, wait for it to go up, and then sell. And you can't do that every single week consistently. Amazon is a no. Sorry. Dennis, thanks for saying hi. I'm almost done. People love Cheesecake Factory and holidays are coming up and sell after Christmas. Yeah, I get that. It makes sense. More power to you. You have fun. Okay? We the people. Let's look at Coke if you have a minute. Coke is a no. The reason why I say Coke is a no, let's forget the fact that it's in a downturn. Look, a year ago, up, down. Now she's coming down. What I don't like about Coca-Cola, right now the current price is $64.10. The $64.10 is going 51 cents. That's not 1%. Not 1%? No, thank you. 9,754 companies. I'm sure one of them will give me 1%. It's actually that simple. 9,754 companies, one of them will give me 1%. Because short-term capital gains tax. BW, if you are paying taxes, dude, you are listening to the wrong person. Simple as that. It is your legal responsibility to pay the least amount of tax legally possible. If you're paying tax, you're doing something wrong. In my humble opinion. You want to pay taxes? Fine. Go ahead. Okay? If I don't want to pay taxes and I can legally avoid paying taxes, I'm happy with that idea. Do you have to pay tax when you sell? You need to ask that question a different way. Do I need to pay taxes at all? Well, yes and no. Certain taxes you have to pay. Federal tax, you have to pay. State taxes, you have to pay. Real estate taxes, you have to pay. Okay, sales taxes, you have to pay. Income taxes, voluntary compliance. That means you can pay them if you want to. Don't believe me? Look it up. How do you know it's at its peak to sell? Oh, what's that, Barakat? Is that right? Barakat. How do I know? How do I know? Whoops, I went the wrong way. All right, Barakat, let me ask you a question. You see the way the chart looks now? Look, way over here, 62, goes sideways for a little bit, then she shoots way on up. So from 62 to 73 is $11 increase, correct? Yeah, it is. You don't have to agree because it is. Okay, 62 to 73 is an $11 increase. Now, can it go higher? Yes, it can. Is it going to? We don't know. It's actually a flip of the coin. Seriously, flip a coin. Is it going to go higher? Is it going to go lower? That's it. It's actually that simple. Adults have a tendency to complicate things. If you do not have an exit plan in your mind before you buy, then you're making a serious mistake. If you buy it at 62 and you don't have a decision, when this hits 68, I'm selling. When this hits 72, I'm selling. When this hits $63.52.5, I'm selling. If you don't have an exit plan already pulled out, already in plan, then you're just shooting from the hip. You're rolling the dice. You're gambling. If you don't know where you're going, how do you know when you're there? Okay, if you're just buying and hoping it goes up, hey, there's nothing wrong with that. Absolutely nothing wrong with it. Me, personally, simple, safe, predictable, consistent 1%. That's what I want. So if I buy it at 60, or is it 63 right here? If I buy it at 63 right here, 1% is 64. Well, it's actually $63.63. That's where I'll jump out. Because guess what? I'll look at another company tomorrow or another company next week. It's so easy to get 1%. That 1% every single week, it comes to 50% per year. What is wrong with 50% per year? See this? I wouldn't jump into that one. Why? Because it's at a high right now. Okay, people are predictable. When a stock goes up, people start taking profits. When a stock goes down, it gets to a certain level and people say, wait a second. Okay, so what happens next? Okay, look, here's the high right there. And it started coming down already. Uh-oh, now it's coming down. It's a 50-50 shot. But if it's at a high, okay, 4. Okay, if it's at a 30-day high, I don't want to be buying it. I want to buy it down here and take the run up. And when it gets to the 1% that I'm looking for, thank you very much, and then I move on to the next one. It's actually that easy. Adults, you guys, have a tendency to complicate things. Okay, Bungees, Bugsy, yeah, no, that hasn't been around long enough. Do you have to pay tax when you sell? That's totally up to you. How do you know when it's at the peak to sell? That's totally up to you also. Hayden, you already asked about JPEQ. Yeah, that's a no, dude. Okay, seriously, look at the numbers. When was the stock you were looking at was at the low 420? Wasn't that MPW? Thank you for your time. No nickname. What program are you using? This is not a program. This is a trading platform. Trading platforms basically where you walk into the stock market and you start playing. Rich don't pay taxes. Yes, they do. They just pay different taxes. Thanks for the info, the energy spent. You're welcome, we the people. Does that shoulda, coulda feeling ever go away? Nope, never does. Well, actually, it kind of does. Okay? Now, if you have a goal in mind, I want 1%, only 1%. I honestly don't care what the stock does after that. Kind of yes, kind of no. Okay, almost every trade I go into, I already know where I'm going. See, I like dividend capturing. Not dividend capturing. Well, I like dividend capturing, but I like covered calls. Because if I like the stock, and then I do a covered call right there, it's at 64, so let's do the 64s. Let's do just 100 shares, one contract at the market. The reason why I like covered calls, number one, I know the company's paying a dividend. I know just before the dividend is paid, the stock goes up in value. Okay, I know the chart is on a trend to the upside because I don't buy at the high and I don't buy at the low. I buy it when it's bouncing off the bottom. It's easy to see, you know. Then, as the stock is going up, going into the dividend, I know the stock's going up. I like everything in my favor. So I know there's a dividend coming up. Stocks go up. I know that it's coming off of a 30-day high, bouncing off of a 30-day bottom. It's starting to go up. Okay? I take a look at selling an option. I don't want to buy an option. I want to sell an option. 80% of all options expire worthless. I want to sell. I don't want to buy. I like to have as many odds and probabilities in my favor going the direction in which I want to go. I'm looking for just the 1%. If I can get the 1%, great. I'm in, I'm out. Thank you. I'll see you the next time you have a dividend. Okay? There's 9,754 companies every single day. Let's get out of here. Oh, wait a minute. Let me finish up this one. Okay? Again, if I'm buying it at the current price and I'm selling it at the current price, see what it says right here, 64.10. I'm buying the stock at 64.10. I'm selling somebody the rights to buy it from me at 64, which is a little bit less than what I paid for it. But here's the thing. I'm collecting $62 per contract. All right, so let's get my calculator out. $62 per contract, and one contract is going to be $6,300. $6,338. That comes to a grand total of 0.97, almost 1%. That would be a no. It's not 1%. It's actually that simple. All right, that being said, we're way past 9:30. 11:30. I'm actually flying up to Maine tomorrow. So tomorrow night, it's going to be a little bit of a different setup. So whenever I travel, it's always a different setup. Okay, and I'm not going to be broadcasting to all the different channels. Probably just TikTok, YouTube, and Instagram. That's probably going to be it. So other than that, you guys have a great night. I will see you again tomorrow. Johnny, I'm glad you like it, dude. Silky, please don't do that. PLTR is a piece of crap. No dividends, no thank you. Okay? No dividends, no thank you. All right, out of here on Instagram. Turn you off. All right, off over here on, what is that called? Twitter. Done with Twitter. Done with you guys here. Have a great night. See you guys again tomorrow from Maine. It'll be a little chilly, so I might be wearing something different. Okay, you guys on YouTube. Catch you guys again tomorrow. Okay, are you sure you want to end streaming? Yep. There we go. And you're done there. 828. Holy double Chucky Chows. You guys have a great night, and we'll see